There we go. So basically we can see that we've broken the yellow trend off of a minor consolidation beneath an old range. We've hit this B point shortly after the break. Beautiful movement, another target's hit. So this is the idea with this. I'm just going to go over this real quickly here. The legend, as I call it. If you type into the chat legend at any time, you can grab this. You can see all the targets I've placed today have now been hit. Now another target I'm going to place on there is like a blue line. And I'm going to go ahead and explain the blue line after I've put it on there. So basically that's the line I expected to get back to. It's a barrier, an abstract line. It doesn't work like your average yellow line. Like we could see the yellow line broke and the trend changed altogether. We can see that it broke with an impact and it broke in the opposite direction of the way it was facing, and it changed the trend. You know, that's what it's supposed to do as a yellow line. A blue line is supposed to work as a barrier. It's an abstract line. Sometimes we have it like this where we're interested in coming back to it. That line, I do expect it to come back to it. Typically when I'm like very adamant about it coming back to it, I can even make it white and blue just to make sure that it stands out above any other blue lines that are on there. But today there's no blue lines that are on there, so it doesn't need to really stand out. So I'll just leave it alone. Now the red yellow lines are like yellow lines, except they're meant to be noticed a little bit more. Like you notice how I just made the blue line blue and white to make it stand out? Well, the yellow lines can stand out with red on top of them as well. And the green dash lines, you've seen 3, maybe 4 of them hit already on the way down. They're target levels, where on the other side of the break of the yellow lines, you can expect these levels to be nice areas for you to take profit at, so you can spread your orders out across them. Of course, it's not the be all and end all. If some of them aren't hit, like I do say, some of them aren't meant to get hit particularly. And we when we leave them, but we have to mark them just because they are the target of that pattern. And in the future, if they decide to get hit, I like to understand that they're there. So I mark them with a target level, which is the green dash line. Previously hit targets that I'm still interested in are blue dash lines, and important levels that I want to mark that stand out more than anything are like these golden levels, which I've basically, we have one of them here, but I've kind of turned it down a little bit, kind of taking the emphasis off of it a bit there. But we know that that once was a very important level, and it is obstructing us as we currently speak. So then we currently have this other red yellow zone at the top. It's like, what's that? Well, that used to be a range. It used to have back and forth trading in it, and the red zone was considered the high, the green zone was considered the low. Sometimes I put a purple zone in the middle just to identify the neutral middle zone, and that's basically how you understand all the lines that we have on here. Any lines that I'll manually draw on there are like that. Now there is actually one more that I should add on this list. That's the purple lines. Basically, they're just like blue lines, except they're associated with symmetrical triangles, and that's that. So here we go with the return back to the blue line. You can see here that we also have a 5-wave move since we started the trend break. We've got 1, 2, 3, 4, and a truncated 5th wave. Not necessarily the same as the first wave, but it does give us the opportunity to draw on another yellow line. Just like the other yellow line, it's expected to break, and it's likely to gonna have something to do with the blue. Now, it's the case that this last yellow line, it's not really doing us any good anymore. I'll turn it down. At the end of the day, it's not like it doesn't exist. I could remove it, but I can comprehend the data, so why remove it? At the end of the day, it's one more thing that's on there, but until it's in, a couple trend breaks away, and then I'll take it off. But it technically is the last trend that broke, and it was never retested. 5th wave now extends past the 4th, as it should typically. Could we have it? Now, another thing about this. The last time we did a 5-wave move, how did it work out for it? It went 1, 2, 3, 4, and then it was like, whoa, 5, holy smokes, right? What happened there? It's like the 5th wave was bigger than the entire pattern. I'm like, well, the play out literally was bigger than the entire pattern. I'm like, okay, all right. Is that going to be the way of today, though? At the end of the day, we do have another 5-wave move here, and it's pausing at the 5th wave. I'll tell you one thing. It's at the same level, but it's going in a different direction. It's obstructed by the same thing that started this 5-wave move in the first place. It's all facts. At the end of the day, this is a 261 down here. That's one thing that's just interesting to me because I can't help but notice that this distance that we have up here is very similar to the distance that we're lacking on the bottom. And it's the distance at the other side of the extreme. You could say appropriate for the wicks and spikes of the area. And I can't help but notice that the wicks and spikes that we use to reverse the bottom are actually very similar. And it's also very similar to the consolidation we're doing right now, adding to the node, which is also suspiciously this size. So I'm like, all right, don't necessarily have to take action on any of that information quite yet, but one thing that I am very curious about is how the break of the yellow line will have a relationship with the blue. And I'm working on a nice video yesterday. I was up working on a nice video. Basically, talking about the day, this day, was the 29th. Yeah, right there. The 29th. And what's funny is when I called it a meltdown, and you can see it dump down, like here, part of the video, like I still have it open, and let's just take a look halfway through that video. I'm like, it started out and it was literally looking like, oh, ignore all those lines. It was literally looking like this that day. Like it was consolidating, chopping, chopping, chopping. And all of that happened on this day, not that day, not the big red candle, but this day. Okay? It was on people to hold through this still. And you want to know what's funny is I said never to drag your stop below that level. Never. I was very, very clear. But we shall see in the video. And I was also very clear at the end, right where you saw I took that picture right there. I was explaining how I think it's going to continue, and that you shouldn't drag your stop beneath that level. So that's okay. We shall see. We shall see. You know, that's actually a really short-term move too, because like I could still make a video on how we caught the reversal up here. You know, and I was like, no stops are safe above this level, and I could literally make a video on all of that. How like it started out blasting. I think I might. I've managed to work it down to 10 minutes, which I'm gonna see if I can get the video even shorter there and do this on a different day. But this is the run. Like I literally had this wee step on this level from before we even got there, and it's been incredible since we've left that area. And it's like, well, if you missed the short, that's fine. You might have missed that. And if you missed the long, that's fine. You might have missed that. But look at how close they are, and look at how many points they offer. And I mean, like, you know that the short took nearly all day of sitting in a range all day. And I said at the beginning of the day it was going to have a meltdown. By the way, the yellow line broke to the blue. If anybody took that, you want to make sure that it's absolutely safe right now. This is absolutely exactly how it should be moving. There's not a single thing that I would change about what it did, about what I said, about what this is doing. Because it did just what it was supposed to do. It moved right from the blue, or sorry, right from the yellow straight to the blue, like it was intentionally supposed to do that, and that's exactly what it did. And that's all I said it was supposed to do. But now if you're in that position, you can take some off and keep your stop at the extreme, so it's safe to continue with whatever you have left. Now, of course, there are B points that are left up top that you could potentially have exposure with. Now, 60% chance it comes back to stop you out. So that's why I say taking some off is really important. So if it doesn't, then, you know, you might have exposure to these levels. If it does stop you out, well, the next trade that you take could equally have exposure to those levels too. You know, we've made a 61% retracement on the short term. Like if I go take fibs from the low, see we're at a 61 right there. It's beautiful. And the trend can be readjusted. It's like we've tried to retest the old one, but it's like, too far to go to do that. So it's going to give up on that. There are things underneath that do look like they want to get tested. That's why, you know, 60%, it was a little bit above 50 that they're going to come try and stop you out. And at the end of the day, the trade itself was to get to the blue bar. So by the blue bar, things should be made safe, like I said. In the event that you took that, I mean, it's clear that those were the levels to target. Anyways, the 3 consecutive lows that we do have now do present a new trend. Just like the one that we broke a moment ago, this one does provide value. The blue line, it's nothing like it was before because it was tested already. It's not like it wasn't, it's not like it isn't tested anymore. It is tested. So we've managed to make a move like this on it. And, you know, we've created other small B points. We will be interested in getting those ones. It's very likely. But I'm like, whatever. Those are tiny. They don't really count. I don't count those towards like trades. If you took them, great job. Like, I mean, but you know, they're quick, fast, and too quick for most people. And I wouldn't expect anybody to really go for those. Obviously, we weren't really far away from them, so You know, it's not that big of a deal. Anyways, we'll see what we do as for the next move. Let's take a look at the other indexes. It's like, what's going on with the Dow? It just does its own thing now. It looks like it's behind. Like it's made the 5-wave move in the morning, and it like where's its play out? You know, the Dow's got some levels I do think it's going to be interested in getting to. It's like it didn't get that. It bothers me. They're going to get that. The Dow looks just like that.
Yeah, just did a VWAP of mine down here on the spike.
No, it's interesting. Yeah, I got a view up a little lower there, but nothing too crazy.
The same VWAP we crossed plenty of times yesterday.
Interesting. I'm inclined to put one at the beginning.
And this is right at the low too of the evening at 150.
Okay. Yeah, the VWAP that I put in there at the beginning of that consolidation puts a VWAP band at the high and a VWAP band at the low, insinuating that the amount of movement that it's made on both sides is very similar. And I'm like, I see that. I'm like, is this one way that it wants to make an S wave? Well, I saw this yesterday. It was like an ending diagonal. Let me look here. I'll find a picture of it. Okay, I can't find the original picture for some reason, but hey, look at this. This is when it was doing it last. Well, not last, but on another example. This kind of thing that we can see here, it's very much like 1, 2, 3, 4, and 5, but then what happened after? You know, like we've very much got 1, 2, 3, 4, and 5, and then what happened after? We have this like convergence at the bottom, you know, where we can find that exists here also. Strange enough, 3 consecutive lows after the 5th wave are literally what it does. And I mean, like, here we go. I'm like, is this the thing? Well, let's see if it's the thing, because it's literally what the schematic says. Or am I reading it wrong? You know, because I'm like, this looks exactly the same as what we've got going on here. Or maybe I'm crazy. But like, you know, as far as I can see, so far so good. Now let's look at what the hell was going on last time. I was like, I managed to get that out of this 1, 2, 3, 4, and 5, and then we continued to make that falling wedge there. So I was like, all right, that's cool. We'll work with it. Just an interesting pattern. I would say it's rare, but I'm like, when it shows up, I'm like, well, it's like we have the capacity to find value in it. You know. And it's definitely not because of the heightened awareness of the public and their awareness of this pattern that it's effectively working out, but it probably is because yeah, I don't know. The confidence man, it's interesting. It always makes me think that it's always going to be working in favor of the few and against the most of people, against the majority of them. I mean, like, I think of why does it do all of the things that it does? Only because it works. Works against who? Works against most of the people? Yeah. Somehow I think it's like it works against all the people that buy mutual funds and stuff like that. I'm like, I don't know. Maybe they just get terrible entries and all the short-term traders are taking advantage of it constantly. I'm not sure. But what I can see is that the patterns are very advanced and I can see that the average trading strategy is not. So it's very interesting to see that this works. Because I take this pattern with a grain of salt. When I find it work out, I'm kind of surprised, not gonna lie. Like many patterns nowadays. Back in the day, it wasn't like that. Back in the day, a pattern was supposed to work because it was that pattern. Now, if you think like that, oh, it's very troubling. Because it's not just the pattern that makes it play out. Before, many times it was just the pattern and all it needed was to see a variant of the pattern, even looks remotely like the pattern, it'll work. I'm like, well now, it's like, it's not like that. So we can see one thing about this trend, it did break and now we are retesting it. Something that we didn't really do on the last trend break. But it is true that now we have retested, so we don't have to retest perhaps in the future. We may still be interested in retesting the untested trend. So, untested trend. I was like, whoa, that's a tongue twister. The untested trend. And I'm like, is this a butchered M into W? And I'm like, well, we all know 1, 2, 3, 4, 5 can lead to M into W. And I'm like, well, that's clearly an M that leads into W by the point that we can see that they're divided. One side's an M, one side's a W, right? That's the way it goes. Is that the case? No. Because it looks awfully like a W could form out of this. Well, after all, if it is doing the ending diagonal, it's doing a very good job at playing out, I'll tell you that right now. I wish I could have found a better example. Let me find a better example. Yeah, they're so raw. The examples are pretty rough. This one's kind of cool. Oh crap, I remember that. Interesting. It's like double falling wedges. Both of them failed. It's like, oh, you want to try this again? I'm like, yeah, after seeing it fail twice, you gonna go again for the same pattern? I'm like, wow, that's tough. But it worked. Third time's a charm, I guess. I'm just looking at old examples. That was way back, like, March 2023. And then you look on the internet, and you can find that it looks like this. I mean, this is another example. And I mean, like, it doesn't look anything like the one that I was showing you, but it's true that everything fits the same. That the 5-wave move that works at the beginning, oh yeah, I can't use that, happens first. And it's like, well, first we have, proportion A. That is 5-wave move. And then we have this other giant 3-wave move that happens after. And then it continues to go up. And I'm like, well, and what's funny about it is this one indicates that could lead to, a problem. A 3-wave move? Oh, okay, interesting, yeah, no. Hmm. Yeah, see, when I look at that, and I see the other example, this is the one that I really find value in this environment. It really did that thing. I mean, those other things, maybe not, but that's just somebody's, somebody's perception of what this is supposed to be. And I mean, this is working out really well for anybody part of it. Yeah, it's looking pretty good. Now it's allowed to test this blue line from above. Anybody that drags a stop above that blue line is asking to lose their position. That's a good way to put it. I couldn't put it any better than that. Gotta love it when the market does exactly what you said it was gonna do, though. So like I posted in the chat. You know, it's like I didn't say anything with it because I'm like, if you don't understand that this is supposed to be that, well, you shouldn't be involved with it anyways. And this is exactly how it does work out. So if you weren't part of it, now you can see that this is exactly what happens when we find that. So now you know, and you can develop comfortability with it. And it doesn't matter if you didn't take it, because I'll tell you one thing, the only reason why it worked is because it did before. And if it's not going to work again, well, you may as well forget it because it's useless to you, right? So just look for it to happen again, you know, and remember how precise it was. Remember how particular it was. Remember how it started with a 5-wave move and then it led into a falling wedge like that, and exactly on the 5th wave after, it had 3 drives down, and it did that. And it worked. So now we take these down to here. It's very profound. I love the market and the way that it moves because it's not going to be the same every day, and it's not going to be the same every day. Every way that we have to trade it, it will change as we adapt with the market. You have to understand the changes and you work with them accordingly. It's definitely not a cookie cutter, repeat the process kind of environment, but you know, how are the pieces positioned and how should we strategize about the environment? What's the best way to get to the target? The safest and risk-free or lowest risk way? You know, because risk-free is unbelievable to some people, but is it not true that when you put your stop into profit, you have reduced the risk entirely of holding that position? It's undeniably true that it's going to be profitable on your account. What other ways can you do it? Sorry, just drinking some coffee. But yeah, no. How else can you do it? Well, let's say you, in a hypothetical situation, you took 1,000 contracts down here, and you sold 999 of them here. Do you think that you could put your stop loss 10 points below where you entered? Well, you'd be down 10 points on your last contract, but you sold 999 of them up here. Means you've got a gajillion dollars from from this, and what you have left, yeah, sure, it might fall down 10 points, you might lose $10 on it, but because you've sold literally over 1,000 or about 1,000 contracts, you know, you're gonna have so much money. It doesn't matter if you lose money on the last one. So the point is let's say you took 3 and you managed to take 2 of them off now. That means that if you have 1 left, the last one has to go all the way down to this level before you can see a loss. It has to go all the way to here, you know, that point right there. So I'm like, okay, let's say for instance you set this situation up for yourself. You got 1 left, you know, maybe 2 left even if you're if you're you know, if you've built a decent cushion in the morning and you can afford to keep 2, then all the power to you. But you know, that stop can be kept at the extreme. Now you know the market has to make an entirely new extreme to get you up. That's tough, hard to shake. And then it's like you can focus on putting this on the back burner, never touching it again, and focus trading against it on MNQ. So at the end of the day, the fibs can be applied here. And it's like you know, if there is and has been the best way to trade over the course of the past, you know, foreseeable past, I'm like, well, it's true that catching the extreme at the longest, farthest point away and keeping it allows you to get exposure to the upwards direction in perpetuity, not having to worry about where to go long every day because you are long. Then you focus on where to go short every day because you can focus on trading within your position. And then you focus on just trading half of the direction. Sometimes when you trade it really well and you've got a nice hedge trade and you've taken it all the way down, you can see a clear reversal like that. I'm not going to bash you for reversing it and going up with your core. You can do that. You know, if you've made money to justify being able to do that, you can. At the end of the day, you know, there's many different options that come to those that are willing to put in a little bit more work. As it should be. You know, don't you think it's fair that if you put in a little bit more work, you should get a little bit more options? And you should be a little bit safer for putting that extra work in? And I mean, like, well, that's why they do it. So, like, Fair play, fair play. Now, is it not true that we've made a very good job at coming back down to the B point down below? And honestly, if you make trades against that core and you try to get the B point down below, there's no use ever letting a hedge trade become a loss again. You want to play it very tight, very close range, very, very aggressive with your profit taking and your dragging of your stops. Um, at the end of the day, we understand that the moves against the core are short-term ones. They're not meant to be keepers. They're meant to be stopped out. So you're trying to squeeze as much profit as you can out of them until they get stopped out effectively. They're an insurance policy against your core position. So you don't have to take profit and dwindle down your position to just one. And I'm like, sure, it's fine. You begin and you're like, all right, I've taken three, I take two off and I'm left with one and I can hedge against it. Sure, that's fine. But you want to turn that one into two eventually, that two into three, and develop that core into a bigger position, something worth monitoring, something worth nurturing, because it will give you that upwards exposure in perpetuity. It will allow you to be exposed to the next time we make all-time highs, and you don't have to find the low because you're already in. You've already found the low. You've already fought for the low, and you own it, and that's the key. And when you have that situation, you have control. You have the ability to say, where am I going to hedge? And when I have hedged, then there's no way that you're not going to be left with the extreme. And if you're not going to be left with the extreme in any which way, shape, or form, that means you've captured the extreme, and the market can make so many moves, but none that can take the fact away that you will be in from the extreme. And that's control. Because at the end of the day, you might have developed a core position from here and taken it up. But if you took it down and this one actually overpowers your original position, well, you're left with this extreme. And if you want to try and hedge that extreme back up, it's going to be a lot safer than it was just to catch this low originally. Because you didn't have a short position here backing you up originally. You just had to take the risk on the first trade. Where if you were wrong, it would have been a straight loss and you wouldn't been able to make anything on any kind of short trade. So I'm like, let's say for instance you were short here, and let's say you had like 10 MNQ or something like that, and it came down and you could afford to get one NQ, and or even three NQs like you would usually get if you are doing the three trade trifecta. At the end of the day, making sure getting that original three without having that 10 would be a lot riskier. Because at the end of the day, let's say you get three down here and you're wrong. Well, you still have 10 and you've made money on that 10 while you were losing on this three. If you decide that you wanted to cut that when you've lost this on this three, it's like you've only lost on two. Think about it. So this three is like having 30. Okay? At the end of the day, if you're making money on 10 and you've lost money on 30, that means that if you sell all positions at this point, you've actually only lost money on 20. Because for the 30, 10 of will be canceling out. So I mean, like, that 30 is initially risky to acquire down here, but if you have a short already, it's not as risky to capture that initial position. And this will always work in favor if you work to make it the case that you have a core and you're looking for a hedge. And then you're in the business of what they do on Wall Street every day. The fund is not meant to be sold. They're not meant to reduce their control. Assets are meant to be held and nurtured and kept. The dividends are meant to be reaped and the company's meant to grow under your supervision. That's the way it goes. That's the way they want it. That's the way they have it, and that's the way they do it. I mean, you can look up on Google. So I'm like, well, that one thing is clear, is that they're doing that, and it's like, or maybe they don't have control. Maybe it's the entire public that owns all of the companies. I mean, like, maybe it's not Wall Street. I'm just like, that's tough to believe that though, or else the people would have more of a say. And you can go out and find that Vanguard and BlackRock and all them own like 80% of the SPY and stuff like that. It's ridiculous, like a ridiculous amount. So the amount of power they have is, I think it should be illegal. What's funny is if you are like in Canada, and you're like, you know, a telecom company, you're not allowed to have a monopoly. You know, like Bell or Rogers, you know, has to be there. They have to make some sort of monopoly, or they have to, you know, have some sort of, you know, fair game. But in hedge funds, in the business of hedge funds, one hedge fund can own all of the S&P 500 and it's not illegal. That means that every single tech company and all of their competitors are owned by one freaking company. And it doesn't matter if one of them falls off because they own all of them. And then you got the individual that's just in Verizon or just in MasterCard. These guys own everything. Doesn't matter if one falls off. And I'm like, well, you know what's really interesting is when they own everything, it's so easy for them to hedge against it using derivatives that capture exposure to the entire market. So they know that if there's a downturn in the entire market, there will likely be a downturn in the assets of all of the major players in the entire world. They take a huge hit. You know, they better be hedged. Because I'm like, how else can they survive? And I'm like, okay, well, those that have the biggest funds better learn to hedge, or they'll be taking huge hits on any kind of decline that the market makes. And I mean, like, okay, I guess you could say this is the philosophy of it, but I like to think about this while we're in the middle going sideways. And we've just hit the B point for the first time.
That VWAP you put in has been pretty effective.
Yeah, it's made the equilibrium of an S wave now, which is really interesting.
May get some consolidation here today with that report coming out tomorrow morning.
Oh, interesting. It's an inflation report, eh?
Yeah, big time. Year over year, month over month, core inflation rate.
So the way that I see this is the bigger players must be preparing for everyone to show up for that report. It's very likely that they already know the result of what's going to happen, but they're worried about exactly how the people will respond. That's what I think is the name of the game right now. It's about understanding how the people will respond to it, and whether or not they can position a hedge accordingly, whether or not they can have it they can choose to work hard today to set up themselves for a position where they're safer to go into tomorrow. Like, undeniably, is it not safer to go into tomorrow if you've caught the low of today and you've managed to hedge the high of day? And then it ends in the middle, let's say. And let's say it starts in the middle tomorrow. I'm like, well, undeniably, if we could formulate that position, it would be the safest and most prone to profit. So could it be that we could potentially set that up? Well, one thing that we could have is exposure at least to one of the extremes. Maybe not both of them. Maybe it's running into the end of the day, or it's at the extreme for the end of the day and it doesn't allow both extremes to be caught. And even if it does, maybe one of them gets knocked out overnight and you're left with one extreme. Well, that's 50% of the movement. Then you can spend the morning tomorrow finding a hedge for that trade. And then you've got both directions on lock. If it decides to make a huge move, then one of your positions will be stopped out with a profit. The other one will continue to profit, and you can find a hedge for it. It's a good plan. Oh, thank you, thank you. Yeah, and so I did readjust the trend and everything. I removed the B point because it was hit. And, it doesn't mean that these other levels that it presents are not, capable of getting hit and being responded to as well. But they are. Remember this range, we had a chop at it before, right? So we could grind it a little bit before getting into it, but it's a green zone. I mean, we start by throwing everything at it, and then we chop at it in what I call a siege node. Call it a siege node because, like a keep to a castle, there's barriers on either side. The gold is on the inside, really. There's nothing's happening for nobody unless we get into that range, basically. That's the deal with it. And I'm like, yeah, sure, everything's great till now, but the real money is when we get this, quote unquote obstruction and claim it as our own and make it ours, make it a support. Like right now, it's undeniably a resistance level holding us back. The people that are benefiting off of it going up need to buy this area out in order to have it benefit them. There's no other way about it. And it provides a resistance barrier. Think about it. The more that people understand that it is resistance, the more people will sell at it, the more people will respond to it, the more people will acknowledge that it is a barrier. And the more that we can work that down, the more benefit the people at the beginning of this trade will have. Now, of course, the one thing that it does remind me of is the triangulation that we had at the beginning. I can see that the same amount of space and time is what we're taking to make this triangle up in here. So we want to be careful with that. But I think that, just because we form this triangle does not mean it has to play out the same way as the other one. We could have something of a very similar kind of play out to what we had here. Something that's not just, not incredibly large. Something like this, like there. Something like that. Yeah, hold on a second. Let me think. When we do this, it could be like a smaller version of what we just did there. Again, smaller version. It's cool. And we do that again on the other side of this range. Eventually. Eventually, when we get through this range, we see the same equality that we make here on the other side of it. I find that that's very likely. The irony is, fighting for the move is a short-term objective. It's not something that I think is going to have long-term longevity. So prepare for it to come back for you. Regardless of where you enter in this environment, I find it very likely to overlap much of this environment in the future. It's not like what we've been seeing lately. It's been like, all right, you catch a move in the morning, you hold it for the rest of the day, and it works out really well. It's not like that today, though. It's going to constantly overlap people, and that's fine. It'll provide constant short-term opportunities. Now, remember when we made this move before. Do we remember how many times we made M's into W's, and how many times like we could go M into W like that? I know it wasn't like super crisp and clean like that, but it's true that it did make a W after that M, and it got better at doing it. And I'm like, does this W make an M after? Because I'm like, yeah, sure, it's not like your crisp 5-wave move that we would usually see, but it does come from a W and lead into this kind of movement. And I mean, my idea with this line is that it has like that fake break, that it's like we don't make that proper retracement, but instead we grind the crap out of this level before we can, the idea is that we grind it. Why? Well, because we want something to stand on once we actually break above it. What if we want to respond to the red zone and it comes back down? Well, if we haven't made anything here, there's a good chance it'll fall right through. especially if there's left untested B points, which there's not. So I'm impressed with that. You know, they managed to get this B point where yesterday they probably wouldn't have because they sucked at getting B points yesterday. For the good part of it, for the most part, they were missing them. I remember. But you can even see what we were looking at in here, where I'm like, oh, 5-wave move, and it ends and begins W and an M. And you can see that was interested in making a W after, where it was kind of like a flat top, and it fell off the flat top. Hmm. We're adding to the node though. If we go ahead and just take a look at the volume that's presented on this move and on this move only, you know, it's depicting that there is a heavy volume node right in that area down there. Which I'm like, alright, that's fine. I can see there's a little B point in there. It's kind of a small, crappy one though. We'll just put that as like a dimmed out one. Can set the tone for the consolidation. Like, roughly that same kind of movement. I mean, it's like when it's not making really badass trends that are moving the market, what's it doing? Well, it's making this pullback. Because, I mean, like, this is how much it pulls back when it pulls back. If it's not making a move that counts, it's doing this move. And I'm like, wow. I was like, it's true, though. So it's good to understand that that's, like, the case. If it's going to show you a move 12 times on the chart and you don't even notice that it's happening, I mean, like, you're at a disadvantage, right? Like, 100%. So I'm like, well, first things first is, you know, we can take a simple shape and understand how many times is it happening? Does it care about it when it makes that move? And the second question becomes, I'm like, well, if you're exposed to a trade, should you allow it to make this move? Well, of course, if it's gonna, I just noticed that it's the same size as the range, but which I like. But the thing is if it's going to make it so often and you don't allow it to make it, like if you're like, oh, it dragging the stop up within this close of the current price, you could be susceptible to the pullback of this size. And I mean, like, yeah, that could be uncomfortable because it's like 17 points. So I'm like, it means like you don't want to put it within 17 points of the high. Well, not the whole position. You don't have to keep your entire stop in one stop. Like like if you have more than one, you can keep one stop at the bottom and then drag your other one up the staircase if you wish. But until it makes another step, it's not safe to drag it up. So, you know, like I said, this area can be a consolidation. We're totally consolidating. At the end of the day, the rising wedge did not have the same impact as the falling wedge. The falling wedge worked really well, worked immediately. And how's this treating the people part of it? Is it because it formed this shape that it's supposed to reverse? Because when we form that same shape, which is undoubtedly very similar to the one that kicked it off, it's not it doesn't care. Why doesn't it care? I'm like, well, it had this reversal at this level already. So it's shown us that it's capable of falling off of a level like that, off of this level. And all it needed to do was chop for this much. So I'm like, oh, well, now that we've made the rising wedge and we've chopped for this much, maybe that's what it takes to come down. And I'm like, well, on top of it, we've also, well, we haven't really affected momentum negatively. That's a red flag to not having a bearish divergence. That's really strange. So I'm like, here, did we have a bearish divergence? Yeah. It was going down like heavily here. Like you see those two highs? They were literally going down. And I mean, these were flat. As far as I can see, that's pretty flat. I mean, it's not like it was going up or nothing, but it was flat. And this is clearly going down. So is there a difference? I mean, like, well, we could argue about it all day, but if this is going down and this is flat, there is a difference. And I'm like, okay, well, that's fine. We get that through. And I'm like, okay, here it was kind of interesting because did it make an advancement? No, it was flat. But this one was clearly going down. So is there a difference? Well, it was enough of a difference to make it work. Is that not true though? Because up here we had enough of a difference, this coming down and this being flat, for it to make this much of a move going down, which is incredible. Made all of that movement just off of this. And just off of this bearish divergence amounting to this much flat and this much divergence gave us this much movement. And then we could see with the same amount of movement at the bottom, exactly the same amount of time, ironically, we could see that this was going down and this was flat. Wait a second, that was different, right? Because remember, it was the price that was flat before and the indicator that was going down. Now all of a sudden, it's the price that's not flat and the indicator that is. So it's backwards. So can we find the same analysis out of it though? Of course, the market respected anybody that understood the fact that there was a difference. There was a difference. And this one, whether it was the flat part or the slanted part, it doesn't matter because this one was different. And it insinuated that things should be different. It's funny to me too, because if you look at what the momentum said, it's like, yes, the price was flat. The momentum said down. It went down. Yes, the price was down. The momentum said flat. So where the momentum was making progress and the price was still going down, what won? Well, the momentum prevailed. And like I said here, there wasn't a bearish divergence. What did we do? We came up through it. So I'm like, I wonder, it's a little complicated, but I'll make that into a video so you can pause it and look at it over again, because just to quickly go over it one more time, this part up top, or you know what, I'll do this. I'll get a fresh chart. So I'm like, all right, no questions asked. We're looking at something completely fresh here. Whatever's on this chart is the only thing that I'm talking about that matters in this example. So here, this is flat, right? And here it's going down, right? We can see that that's the case. Throughout the same time period, this is going down while this is going flat. That resulted in the market going down. Okay, the indicator said down and it went down on command, right? So then we have this where the price is going down and the indicator is not. So the indicator showed the resistance, not the price. Just like the indicator showed down, not the price. The indicator showed flat, whereas the price went down, and it went up. Two different kinds of divergences. One where the price was going down the price was flat and the indicator was going down. One where the price was going down and the indicator was not. And we could see that amounted in the same kind of reversal. And I'm like, well, now, undeniably, I can't help but notice that every single move that we've ever done today has been part of making 5 waves. It's true that we have a blue line here that I do believe we will get back to. It's guaranteed, in my opinion. And from where is the million-dollar question? Doesn't mean from here, but it could be. What it means when I say that is that if you drag your stop within the path of it hitting that level, it could cost you your position. And I don't care if it gets 100 points away from it. You know what I mean? So it's like that's the severity of the situation, because it's all about accuracy, all about consistency, all about maintaining an understanding of what you're doing at all given times. Because it's the only thing that you can ever justify taking action on, is because you completely understand exactly what's going to happen. And if this can gyrate in such a way that dictates that it's in need of coming back to that, we know that could benefit. Now, of course, it's not an incredibly large move. It might not be good enough for you. But let's say it did get 50 points away from it, and we know it's going to end up coming back to it. That could be attractive. At the end of the day, here we go. Made a little bit of a note up here as well. Has this node been seen anywhere else? Is this an appropriate pullback, could you say? No, not really. When have we made this pullback before? Is this a new thing or something? So it's like, it might be, but no. There it is. So are the things that we consider important? That's the important part. It's like when the market consistently shows you that what you do consider is important and it follows the rules, then you understand that what you're doing is correct and you can maintain it. It's no time for emotion, right? When you understand, when you're too busy with the understanding that you have, calculating, you're busy implementing. Like, you can think about all of the things that that people do well that are dangerous. You know, like I like to use the lumberjack, ironically, as the example, because when you look at a chainsaw, if you've never used it before, if nobody's shown you how to use it, you're gonna look at it and you're gonna think like, ah, geez, like I better be careful, better, read every button before I touch it and everything, and figure out where everything is and be careful with it. Whereas, everybody could pick up an axe and they understand that that's fine. You can cut a tree down with an axe, but the chainsaw undeniably is way more effective. The person that is a lumberjack doesn't get any of that kind of uncertainty or fear. They go like and grab that thing like no tomorrow and just go to work like it's just yesterday, And the thing is that kind of understanding it eliminates all of the need for emotion because they understand exactly what every button does, exactly what their mission is, exactly how to do their objective, how to cut the tree, what angle and all that, whatever is required, but they know it so that they don't have to worry about tomorrow because they're doing the same thing again. And certain things like that, we want to make sure that we nail down. Like there's certain things that we're going to do on every trade. Like we're going to have a certain amount of quantity, we're going to want to get a certain amount off at every target. Like we're going to want to prepare ourselves for these things before we even take an action to begin with. Like it's part of the plan. So, like I said, deja vu with the blue line, right? It came back to the blue line, and now it's being really unforgiving for anybody that wanted anything more than the blue line. Interesting. Deja vu. Now let's look at our divergences again here. We got nothing. Now, what's funny about this chart is it looks like it just went from the red zone to the green zone. So impressed with that. Absolutely impressed with that. Love it. Because I'm like, what is it supposed to do in that range? Well, it is designed to do this. When we first met this area today, we did not do that though. What did we do? We spent the same amount of time grinding on the top, space and time, as we did on the bottom. And what was used in the middle? Nothing. But what's funny is that this area that we can say was used on the top and the bottom with absolute precision and the same amount of time and everything is the exact same size as the middle of the range. Who thinks we're going to get this in the middle? Could we? I mean, it would be appropriate after all. It's not like we haven't started it as well. I'm like, well, first things first. It's true that we have evidence of it being, the red zone being used as resistance and the green zone being used as support. So God forbid that wants to continue happening. Well, we mustn't obstruct it from happening. I tell you, if you drag your stop within this range, I don't care if you're long or short, if it gets used, you will be out. And that's the tough part about that. I'm like, yeah, sure, okay, well, we know now that this tiny little range that is basically the size of our average move that I was saying before, what is it, 17 points? Yeah, 17 points. And we can't allow, 17 points from the top to pull us out of the position. And this one wasn't even 17 points. But I mean, like, now we know that this area can be used like this. If it chooses to use it like this, it can never affect us negatively. You know, we can't be caught obstructing it from using the range, basically. And if we wonder why we've lost on a trade because we've obstructed this, that it would be quite clear in retrospect that, hey, it was a range. It's supposed to be used red zone to green zone, and if you put a stop anywhere in there, it could get hit. And I'm like, okay, well, remember we made wicks and spikes below this range. There's no real bearish divergence that we can see, although the lines are quite high. The and that doesn't really mean much, but it is true. Um, we could make the spikes and wicks out of the top. Who's to say we don't make this entire rising wedge somewhere? And the next time we make it, it's probably going to have a better impact than. Actually, hold on. Let's say, for instance, we make it appropriately this much above, and then it can make this move again and hit the high of the range. That would mean that this spike would be on the other side, on the other side of the range. This must be allowed. In fact, that is an intriguing hedge point also. Any movements that we get on top of this red zone are subject to coming back to it. Under no circumstances do I think that stops are safe above it, let alone inside of the range. It's interesting that this B point left untested down here. Not under any circumstances on the way through did it really try to hit it, but it did here, didn't get to it all the way though. And that was the result of this trend trying to break. Many people that just sit down at the computer right now won't draw the trend like that, but they'll try it like this. It is true that those two lines are completely different. Until we break both of them, we're in an uptrend. They will both break today, I guarantee it. It's a matter of when, not if. And how much does it impact the way we move? Like, could it be a mere readjustment? Like, how many times yesterday did we see that it broke just to readjust? Like, when we make a trend and it's too steep, like, oh yeah, here we go, boom. It's like, wait, hold on a second. What are we supposed to run on this trend all day? I'm like, no, 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 no. That trend always breaks. And we want to see that effectively readjust the angle. At the end of the day, the steepness can bring weakness, and this trend has plenty of steepness. So you could say plenty of weakness. At the end of the day, one thing that could rekindle the strength of the trend is to consolidate. With the consolidation, we could develop a bearish divergence though. That's one thing, that's one risk that it would take on. But like this trend.
Come on there, John. Why is it not red-yellow?
Because I think that it might not break with much impact.
Oh, okay.
Like, one thing that this area can do is we may continue to break these lines within the confines of this red-yellow area. Like, it could chop, and until we have like a 30-degree angle, like it goes ding 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 ding, and then it's like, oh yeah, like 30 degrees, and then it's like, oh, it goes up, and then watch. When we do one of these simple advancements, how much time would it give us? We could do all kinds of crap in there. We could even do this again, maybe. Oh, geez, we would be able to. Interesting. I don't know how I feel about that. That's awfully particular. But we shall see. If it makes that consolidation, you can count on the fact that 40% less market participants will be in there. I think people will give up under the weight of it being too slow and too sideways. So we shall see. Like, one of the average consolidations that we've had, we could get 2 of them, like a double. And what that'll do, I think, and this is cruel, but it'll put a lot of people short, and it'll go up after and stop them all out, I think. And in the process, think about if we pause here for long enough and continue to hurt momentum, many people will short it. Where will they put their stops? Right there? Right below the 261 where nobody wants to be caught buying. So how are we supposed to get through it? Well, if we convince people to short here, we could destroy that level. If we can convince 1,000 people to short right here, in aspirations of, getting maybe the untested viewpoints down below and such, it could be a squeeze. And in the morning, we like to squeeze people apparently. So I'm like, it's very interesting. Another.
I made a bit of an observation there with in confluence to your bullish divergence reversal there this morning
Oh yeah, let's take a look.
that you were talking about.
Yep.
So with the RSI and your bullish divergence,
Okay.
I was actually looking at the MACD as well.
Okay.
And if we zoom out just a little bit as
Okay.
we're coming down. Yeah. So when we thought it was the reversal the first time, but on its way down, there was no histogram clouds on the bottom.
How do you mean? Like this is all pre-market.
So on MACD.
Oh, you mean in here though, right?
Yeah. So yeah,
Okay.
that's what I mean. Yeah.
Okay.
Right there. But on the MACD, on that rundown, there's no histogram clouds when it decided to reverse. Like they're not on the bottom. You see what I mean?
Oh yeah, okay. So it was like grinding on the top and then it reversed, but it was like this was coming down and then this was going up. Like you could see directly that the histogram was making progress upwards where there was no visible progress in the price whatsoever.
Oh, what I mean though is that when we actually are looking for, say, a long, the
Mhm.
histogram cloud will be on the south side, and the pressure
Like
lines, like the red and the green, will be on the top side. Or
oh,
when
okay.
it'll start to go upwards. Now, if you see the actual real reversal that we had with the bullish divergence that you were
Okay.
talking about,
Let's take a look. All right.
you'll see the big histogram cloud on the bottom,
Right.
and then off of that we made bullish divergence off of the histogram.
Yeah, it was very clear off the histogram there.
Yeah, like very, yeah.
Mhm. Yeah, the
If you see the
histogram
big spike in a little histogram, like that second spike with the little histogram, like that would have been a tough one. Like if you were
Mhm.
using the histogram as confluence.
Oh, and this is also doing your thing where basically the bars aren't below the zero and the cloud is coming back to the
Which means it's a fake.
which yeah, and effectively, I think it's interested in making spikes and wicks out of the top, but I'm like, good luck getting away from this area. That's the
Yeah,
one thing.
It
in
wouldn't just be that immediate play.
Mhm.
yeah, the
Okay.
same clouds worked at 1025 and at 1040, same sort of deal.
Nice. Oh, and I also want to point out how this five-wave move is absolutely terrible. Like, at what point today has
It
it
sucks.
has it ever done that?
Really annoying.
Almost
Because
looks like the daily 5-wave move.
well, the thing that's weird about today is that today has been full of five-wave moves. Like I couldn't help but notice that the first move of the day did that. It was like not. It was like right off the gate. This was the open. The At the moment that the market opened, it just destroyed this five-wave move. It took the entire pattern and the size of everything that it did inside of this portion and basically blew it out of the top. How are people supposed to survive that? And then it throws it in their face by actually coming down. And I'm like, wow, okay, they were all right
It
technically.
went lower
Hmm.
than it was before the open.
And then it's interesting too because that move that it made right there that effectively costed them a lot of money happened again right here. 1, 2, 3, 4, and 5, except it worked. So it's like it was almost like, oh, I know this just blew your socks off, but you have to try again, and it's actually going to work. And that's interesting because the people that had a negative experience with that, you can almost guarantee they wouldn't have tried it again. So it's almost like the batch of people that are really, really aggressive, they were treated really, really badly, but the people that came in after and found value in the same thing that just hurt everyone, they actually were paid. So I'm like, obviously we can, that's one way to look at it, but I was looking at it like the ending diagonal, like we were looking at it here, and that's how that worked out. But I mean, that's all I needed to see was the ending diagonal. At the end of the day, we have something actually very similar. Is it not true that right now we have 1, 2, 3, 4, and 5, and after the fifth wave, we have made 1, 2, and 3 highs? It's intriguing. That is the case. It is a fact. And I'm like, well, something tells me it's not going to have the same impact. Just like the five-wave move originally didn't work, and then it did. Well, we can be presented with something that does work, and then presented with that same thing at a different level, different size pattern, and it doesn't work. And maybe in this case, where it tries to play out from is incredibly different. Like, it's true that this point is incredibly different than this point. Like, this is the domain of an area that it already has chopped and absolutely just consolidated for an eternity in there. Well, let's take a look at actually what it did when it was there for the first time.
We're also only at like a 127.
And that's long. Oh, okay, we'll take a look at that. Okay, so this isn't even long ago. So let's take a look at what it looked like when it first formed this range and what the characteristics were. Well, I'll tell you one thing. This was the old all-time high, and when we made this range, it undeniably had a move that was very specific out of it. This move could happen again. It was the one that set the tone for the range. And then when we started to use it, it was chopping. This is the 5 minute by the way, so it actually took a little bit longer than it shows right here. It's not the 1 minute like I would usually be showing it, but I wanted to go back quick. And we can see everything ultimately came right back down to it. It's incredible that around this medium point, we managed to take all of that movement and make it even. And it's like it specifically ended in that area. You know, this area. It found the equilibrium there. Well, of course, it did hit that all-time high again there too, but still. That's the relationship with it since. Many times has it caused significant obstruction. Like if you think about how it ran into it here, it like threw everything it had at it first, and then it came up and started this grind on it like that, and then finally after the grind we stepped on top of it to show that as much of a resistance barrier that it was turned into a support in the same kind of way. Funny enough, that triangle is not the same size, but you know, look at how important it was on the other side of the spectrum. And that's this range we're talking about right now. You know, we've managed to stray away from it so far yet again, only to come all the way back to this range, which is kind of incredible. And yet again, we've put a 261 into the mix, which, as I mean, it hasn't been treated very well so far. We'll go back to the 1 minute. The 261 is getting a test right now. This is the first time it's tested, and both of those trends have been broken at this point. There will be another one. Like I said, we could get many of these trends to break. The trend has not really readjusted yet. It's still just as steep as it's ever been, basically. Like, in order to push it higher from this point, you know, it would impact the longevity greatly. Like, let's say for instance, it was to continue going higher. One thing that we could say is that it may be interested, like before, in putting the spike out of the top. In the event that we do that, it could be expected that it literally comes right back down. I'm like, what's in there? I mean, it doesn't really matter where it gets off this top today. Is it going to hit the blue bar if it makes that spike out the top? Well, I'll tell you one thing. Even if it does it at the close itself, it'll be very close. The close itself, it might be a little far away from it. But yeah, for the next little while here, it is totally something that we could expect. In the event that we hit that blue bar, it could offer a really good hedge. We know that this area right now has been prone to consolidation, and that's what we've been given. Doesn't mean sell, but patience is key. There's been plenty to think about while it's been doing this.
Looks like a third drive.
Well, it is true that it made that.
Bearish divergence a little bit, just on the 15-second.
Oh, it's showing on the 1 minute also.
Oh yeah, yeah.
So we can see we've made the average counter trend pullback. You know, the one that we made originally here that was expected to be the result of the rising wedge, and effectively that's all it managed to do. And it's the same size as what we originally traded this range as. I mean, it used to sit inside of this confinement area, and it's true that every pullback that we've made has been confined within this area since we've started pulling back. And the only thing that we've done against the trend has been this. Now, or less. And effectively, we can see that more pullbacks are occurring now at this area than we ever have had at any other level since we've been trending. Now, it doesn't, that's just a fact. And after all, we've been creating a node in here. Now, throughout the entire trend that we can see and all of the volume that's presented on this screen currently, we now have more volume at this level than we ever have at any other level. Now, it's true that the red zone's getting a hell of a lot more volume than any other, well, than the green zone. And it's true that the red zone could lead to the green zone. But with all of the resistance that we've put against that green zone, it's true that stepping on top of it could be on the agenda. To acknowledge the fact that it no longer is a resistance, but a support. And it could just be a short-term move, and that's fine. Looks like we're going for it right now. Beware though, because I believe that the most important trend line of the moment is actually this one. These two have started to fade into the past, something I'm not interested in anymore. Go ahead and remove these other ones as well. Contrary to popular belief, the yellow line is more important than many others. You know, many people neglect the short-term lines in favor of only the long-term ones, but that one, it means that we don't have more than 10 minutes, 15 minutes to spend at any given level before having to threaten the downtrend. So we know that that line is going to be part of our future. It's a matter of where we break it and when, not if. One other thing that we can see here as well is that we're testing the high of the VWAP bands. The VWAP bands to this VWAP right here. It's a matter of long-term VWAP bands and short-term VWAP bands. I can go ahead and turn this one into like a darker VWAP band so we can see that it's older. This one, it's pertaining to the short-term VWAP that we can see is cutting through the majority of the price here. Now it is true that we do have wicks and spikes out of the top of this range. Now they do match the ones at the bottom, but just in a different way. The one that we had on the bottom was presented to us like that. The one that we had on the top was presented to us like this. They roughly took the same amount of time. At the end of the day, the wicks and spikes can be made even on both sides of the range. It's true that in this case, we've got a little bit of a zone on top of the red zone and the green zone, an area appropriate for making wicks and spikes around the green zone and red zone. You could say they're like minor extensions of the zones. Now it is true that we have these levels. What's up?
Think about a 127 there.
Okay.
Just to the left, bigger fib set.
Yeah, let's take a look here. Where's the viewpoint? This one?
Yeah, I mean, I guess it doesn't really work now, but because we came back for it, but
No, that could be on the table in the future. Once we break the yellow line, we could be interested in using that fib set. Like one thing,
that was the first fib set this morning that I put on that it kind of stood out to me.
yeah.
Giant S wave.
So this POC level, this is a level that used to have a heavy amount of volume. It's rivaling this level basically. All we basically have to do is cross over one or the other. The POC is likely to shift. They're so even in the amount of volume that they have that it's not hard to shift from one to the other. Now I wouldn't be surprised if we go back to attack that high node again. Of course we did make a retracement. It wasn't quite the 61 that we're used to, but
let's take a look at what it was. After all, it was a 261 with absolute precision. The B point down below is already tested off of the 261, or sorry, off of the 61. So we can see that in the past, this W did play out already. And now we've played out to where it played out before. This is common. It doesn't actually have to get all the way back to the B point when it's played out already. But to this point, it can get back to it and consider it played out. Now, what I find really weird is the fact that it didn't get this one right here. It's like, what's up with that, eh? It's like, it's not like it's tested. It's never been tested. It's a level that could be tested
This move.
of the short-term fibs.
Yeah.
So putting that, that's really weird, you know, because that means that it's made a 261 to a 261. It explains why it didn't get to the B point all the way though. There's also a gap there, but it's true that, you know, this level right here, it's a 261. I can make that gold dashed, and I can make this one gold dashed. I can just go ahead and remove all of those lines now, and we know that that's a 261 and that that's a 261. And for the sake of clarity, here we are back at that 261. We can go ahead and take a look at the fibs. We're at the 41% retracement. The B point would be at the 50. And it is a 5-wave move on the way down. Looking at momentum, we've stretched all the way down to the green. Centralized, not even at the middle point, but close to it. I would say upper middle range. The 61 would simply be lower middle range at the VWAP. But it wouldn't be the 261 anymore. And I think it might be interested in doing a 261 to 261. And remember, this one, it was grayed out originally. And I'll keep it that way right now. It's not like it's untested, but it will keep it grayed out. Because it is dodgy. I mean, I'll give it that. The amount of space that it has there is suspiciously particular to the amount of space that there is in between the two other B points. And if it wants to leave it, wouldn't surprise me. Like I said, it has merely 10 minutes to spend at any given level before it's forced to break the forced to break the yellow line. And every single moment that we make a move closer to it, that gets significantly less and less. Intriguing that the amount of movement that we chose to make a moment ago is very similar to the amount of movement that we make when we do a counter trend move. And it's also very similar to what we end on the high. We have it here now. It's dying to be a triangle. Thing is with all that is on this chart, much is considered. Like there's a lot of movements that are absolutely precise, that like this 261 to this 261, which, you know, it represents a remarkable precision. The divergences have been really effective today, whereas yesterday, uh, they we they weren't as much. Or should I say the lack of divergences as well has been a great indication of whether or not we can continue. Of course, the divergences that have presented themselves today have all worked out in the same way. Is it not true that this consolidation down here produced this amount of movement? And it's like that's very, very much similar to like the amount of movement that we had here, give or take a bit. Very similar to the initial amount of movement that we had off of this move here as well. But regardless, we can see the need to return back to the range is it's compelled to test it from the underside. Getting back up to the B points above could provide a 61% retracement. Also, we can see that the very, very, very top B point is the 61. I do believe we will see it, so keep that in mind. The value of breaking the trend is to acquire the 61% retracement, which is in the middle of the range. Who's to say it stops there? It doesn't have to stop there. But the red zone. It doesn't have to stop at the red zone. Obviously, it's the next question. No, it doesn't actually, but it can. It has been notorious for it. So, should it be the case that we run at it and exert energy at it, to it? I mean, the more the chance that we'll hold it. But if we grind to it, and if we consolidate in the middle, if we use the range, if we use the 61, there's a better chance we'll make it through it. One thing that I noticed about yesterday as well is the movement that we made, like on both sides of the ranges, we could get a consolidation that looked like this, and it was across a level, and it would acknowledge it from both sides. Okay, just putting that out there. Something I think the market wants us to remember. Of course, the B points up top are getting hit very slowly, but the trend break is subpar initially. The retest is underway. And it could be sloppy and choppy. After all, it's got a top VWAP band here. Do you not remember? Testing that top VWAP band could have incredible bearish inclinations as it has in the past, but the one condition that it typically had that made it more bearish is that we were actually grinding on top of it, which you didn't really do today. So I question whether or not it's going to have the same impact. But in circumstances where we've been on top of it for a prolonged period of time, it could lead to some pretty strong moves. In this case, it leads to a fake break, some chop, some, like I said, a sloppy trend break. After all, what it has produced out of this environment is quite interesting. If you look closely, it's true we started here. We came up into the middle and then we did that movement again, and then we popped up and then we did this, and we're here. So this kind of movement, it's really intriguing to me, because did you know that when we do that, it's the basis for a head and shoulders to an inverse head and shoulders that crosses the same point 8 times? 1, 2, 3, 4, 5, 6, 7, 8 times, and it's like the same kind of crap that we have going on in this tiny consolidation. Obviously, I've drawn it upside down. See how it was a fake break? Sorry about that. I had to let my dog out. But it looks like he's good to go. Now we've tested the green zone again without getting to the B point all the way. Another test of the same line. Like we saw before when we were at this range, it's true that the amount of consolidation that we did on top and on the bottom were relatively similar in time and in size. Come over here, we're doing roughly the same kind of maneuver. It's true that what we've done is run through to the red zone and we've chopped there for an appropriate amount of time, and now we've potentially begun the same amount of chop on the other side of the range, which is not too out of order due to the fact that this area and this range itself has been designed to make it chop. So if that's what it chooses to do, then that's absolutely fine. Of course, it will come to an end. It's contrary to popular belief that the consolidation will end, but it does. As every consolidation ends, it's just meant to get rid of certain people that can't take it. Some people can't take it going sideways, of course, because it doesn't offer, juicy opportunities for a prolonged period of time. People think that that's the way it's going to be for the entire day, and it's common. It's like a culture almost. People think very similarly. But it reminds me of like a bad habit that's easy to spread. That's what that reminds me of, because it's not a good way of thinking, in my opinion. If everyone thought like that, it would be easier for me. But there are professionals out there that consider all of the different data that they can get their hands on and not specialize in one thing, like the individuals tend to do. We do find a lot of long-term traders or short-term traders. We find the day traders or the holders. We find the options traders or the stock traders, the futures traders or the bond traders. Everybody's a specialist. Then you look at what the people at the top are doing, the hedge funds, the teams, they're widespread across the board. Different tools for different environments. Specialist in the current environment. And the next one. Best way to look at it. Because if you don't have control over the current environment and the next one, well, you're not going to be doing it for long, right? That's the brutality of it, really. And if you don't have a plan on how to maintain that control, those with the plan will soon obtain it. That's why I say, people with luck, right? I'm like, it's just a matter of time before somebody that knows what they're doing obtains all of what you've acquired on luck. The people that know what they're working for, they earn it. And the people that have it by luck don't know what they've earned, don't know how they've earned it. They've lucked it out. The best thing they could do is run away with the money while they have it. Instead, many people will try and get lucky again. It's human nature. And then, they start trading. That's then that's the end of it. Of course, when I say that, I disagree with that kind of mentality. I don't think that anything should ever be traded unless you absolutely understand exactly what the ramifications of making that trade are. The risks and the rewards. The rewards should outweigh the risk. And it's clear. Every day, you don't want to take action unless, your action is worthwhile, unless that reward is going to outweigh that risk. And the only way that you can take action on that is if you're comfortable with that risk and you have outlined it so specifically, and it's worth taking that risk because of the amount of reward on the other side of the spectrum. And, with every reward that you take, it should encompass multiple risks that you have to take in the future. So for every reward you take, you should be able to take 3 risks or more, in theory. At least that's a sound target. Now, of course, it is coming to the time where this is the amount of time that we've taken on the top and roughly the amount of time that we've taken on the bottom, and things could be changing soon. Like, it is the case that we do have a triangle in the short term, and until those confines are broken, we are triangulating. And Returning back to the triangle from the underside as we speak. So basically, the last time we did this pattern, it blew out of the bottom this morning. But the 61 above being untested along with the B points leads me to believe the downwards move could be a ploy on getting long traders out before a reversal back into the range above. That's what I just posted. Take a look at the divergence. It's interesting because it didn't make a secondary low, and I'm like, in the event that it did make a little bit more of a little bit of a low there, let's say it did. Do you think that this would have also made a low? I'm like, no, I don't think so. I don't think it would have made a low. I don't think it would have been lower than the lowest point. I don't think there's any way it would have been. I think that it might have come close, but it wouldn't have come as low, I don't think. We shall see. Curious about that. At the end of the day, the divergence, if there is one, it is weak. Because, you could say it's doing exactly what the market is doing. It's doing the same thing. And sometimes that's the case. Sometimes there's no divergence. Sometimes it's exactly the way the market is. And, other things can be diverging, like the histogram and such like that. But it's intriguing to me that the bars are now beneath the 0 line. And it's like it lacks, this gives me deja vu to yesterday, like, when Randy, you were talking about it in the middle, and we were talking about it in the middle for a long time, and it was in the middle. Everything's in the middle again. It reminds me of that. Everything's just flatlining in the middle.
Right, you can't make no trades on it. Everything's just super flat, right? You
Yep.
gotta have big clouds and some movement before we can get into anything.
Yep. I think the little triangle there is super appropriate to look at it like that for this situation. To look at it like it's a triangle is not a bad thing, because they're deterrents to me. Triangles are deterrents, and because if you think about it, like everything that happens in the triangle, it's getting worse and worse movement until it's finished. Like literally, that's the objective, is to crunch all the volatility down into a point where it's barely any moving anymore. And what you're gonna get is always less than the last move. And I'm like, this just means it's crappier until it gets finished. I'm like, well, one thing that's beautiful about it is it gives you a depiction of exactly when it's going to finish. And from this point to the tip, it's likely to be rivaling the extremes of this triangle and not trying to stay on the tip anymore, but rather leave it. And we've already left it once, and this is the second time. Hardly, though, but yeah. One thing about it, like I said, best thing about it, is when it ends, and it's about to end. Because it's physically impossible to spend more than 2 minutes inside of this triangle. It's going to have to either make another one, or leave this triangle altogether. One of those two lines will be forced to break. It is impossible to be within both of them 3 minutes from now. And if not, how not? So it's good to have an understanding of the facts, right? Because I'm like, well, if we can expect a trend break in the next 3 minutes, 2 minutes, 1 minute, it's like, well, we can understand everything that we don't like about the situation can end within that 2 minutes. It's huge. Interesting, we've left the triangle to the upside. The last thing that we did was leave it to the downside. Do we make it even? Well, it certainly can. After all, we're at the pinnacle of volume inside of this node. I wonder if they're going to make it the POC before leaving. After all, I do think we'll end up at that high again in the future and make it the POC again regardless of what we do here. But as you can see, we trade here more and more and more. Ah, look at it. See, that red line just came down. That's because we now have more volume here than we do there. And they couldn't help themselves but to make that the case before leaving. Now, it is true that this is the last minute that we can ever respond to this triangle. I guess it's give or take a minute, but yeah. Things should change. What about the 61? What about the green zone? Being able to turn this into a W. Deja vu, really. Honestly, deja vu. What about this W? Are we doing the same thing? Because I'll tell you one thing. This was a really crappy 5-wave move, like it was. But, well, in normal terms, sure, it worked out really well as ending diagonal or whatever, but it, yeah. I can see it's like it's trying to do it again, but it doesn't want to be as clear as it was the first time because it works well and it doesn't want people to obstruct it from happening. I could suspect. First B point knocked out. We've done more than this on the other side of the spectrum. Not interesting. Double. Now, is it not true that when we got into this environment, I also mentioned that we could do a double? Double the average size of the consolidation, and it looks like that's what we've done, roughly. Yeah, whatever. We're getting to the 61. That's the main thing. Boom. So, like, check this out. This is literally what I just said. Absolute precision. It's freaking gold. Last time we did this pattern, it blew out of the bottom this morning. The 61 above being untested, along with B points, leads me to believe the downwards move could just be a ploy on getting long traders out before the reversal, back up into the range above. And then we did that. And it's not because I had to see this yesterday or the day before or the day before that. It's just appropriate for the current situation. Not always will it work like this, but it does. It does when things are lined up as they are now, and the environment is the way that it is now. Things will change, and it will be on us to adapt to those changes. It's not about remembering how we did this and trying to repeat it again, and every single time that you see a 5-wave move, we can't expect it to work the same way. After all, today, we've seen the same thing work how many different ways? Well, I'll show you how many times we've done 5-wave moves today, and they've worked so differently, starting with this one. Wow. Incredible blowout at the top, right? And then 1, 2, 3, 4, 5, you could say, with the 3 extra. And then you could say we immediately ended that, went into this 5-wave move here, where it did the 3 extra. And it only came back to the 4th wave, which is really bullish in my opinion as well. Because we've been doing that in the most bullish of environments, where we come back to the 4th wave and that's it. And I mean, like, what's funny is it's like it did 5 waves down here, and it didn't just come back to the 4th wave. We came back way past that. We're almost at the 2nd wave now. Now, why is it the case that only the ones at the bottom, or sorry, only the ones that are going up come back to the 4th wave, and then the ones that are going down can take back the whole pattern. I mean, doesn't that seem unfair? Weighted unfair? Doesn't it seem like the ones that are going down are getting a little bit more attention than the ones that are going up? That's the interesting part. I see that. Oh yeah. And we've got this B point here. I don't care if it hits right now, it's when it gets hit later, like from above the red zone. It means that anything that we do above this red zone is subject to coming back to it. We haven't even gotten to it yet. So that's going to be a thing of the future. I find it very likely. No way we don't get to the red zone, so it's like, what's the 61 then? It's right in the middle of the range. Insignificant? We shall see. I didn't think it was too significant to begin with, to be honest. If you go back into the recording, you'll see I was not feeling it. Also, allowing it to step on top of this purple line is acceptable. Like, what if we get on top of that purple line? That's juicy if we do that. Because it's going above and beyond its means to be able to make that stretch. And to capitalize on top of something like that would show sign of control. The red zone leading to the green zone is absolutely acceptable too. God forbid it wants to do that, right? It's only 5 points or something. And it shouldn't cost you your position. Oh yeah, yeah. B-point hit. Red zone led to the green zone. Absolutely acceptable. You're right. We never tested the triangle from above as well. So like these points could be interesting. I don't really care if they hit though. I don't think it's good if we like they don't have to hit from this move. They can hit from a different move, and that would be something many people will not consider. Like, and because it affects them negatively, I'm not sure.
how they'll respond to it, but positioning yourself from this middle range area is not the best decision in the world, I don't think. It will be made into the middle again in the future, mark my words. This area that we have, it will look like the middle when we're done with it. And it doesn't right now. It looks like it's the high. It looks like we're running into it. It looks like it's not the middle at all. And I think that, you know, even just looking at the middle of the last few consolidations, what is it like to have been positioned in the middle here or to be positioned in the middle here? It's terrible, right? Like, it doesn't offer a great point to be exposed from. So it's in between those two levels now. It's ironic that the size of the node that we made on both spectrums is how much we choose to spend in the middle. So it's the case now that we had one consolidation up at the top, one consolidation up at, in the bottom, and now one consolidation in the middle, making it very triangular. And that triangle we can see here I feel like we could get one of these original ones where we do like a 1, 2, 3, 4, 5, like a strong fifth. We got one of those brewing. The end of the triangle is near the bigger one. Whatever spikes and wicks we put out of the bottom, we could be interested in putting out of the top, like the last one. Except the last one put out more. Short term, there are B points that have been left up there untested at the other side of this major gap. All the B points from the previous triangle have been hit as well. One thing that I find intriguing is like when we make these triangles, you know, it made an effort to come back when it didn't really retest, and then we made that triangle there and it like made an effort to come back on the side that it didn't really retest. An interesting observation. The 61 of the entire move up, a little bit lower, a little bit higher than where we are right now. The return back to the triangle and spike on the other side of equal size could be in store. How long that can take. Take a while. This is the POC yet again. Mark my words, that triangle is gonna end this kind of environment. I think that's the end of it. When we get through this triangle, we'll be done with this range. Thing that's interesting about it is it's constructed in a weird way. Like this triangle, it's unevenly proportioned. Like we can see that this is like this triangle is a little bit different. It's spiked out of the top and made the other bigger triangle. And it's not like it's been like in this triangle we had equal usage on both sides roughly. And this one not so much. Curious about that. Many of the triangles that we've had today have been filled into the tip. Like right to the tip. This one is one of the first ones that I think we are going to be more interested in making it like a little wider, a little bit more flexible with getting outside of the edges of this triangle. Like the other triangles, the best thing about it is when it ends.
because this triangle has the capacity to end the entire chop and range as we see it. Now, what could we be in store for with the end of this chop? Well, you know how we got in here? We could be interested in moving as we did before the chop. Who's to say that's not the case? Do you remember the other day when we made triangles and we doubled them? Like, let's look here. When we made this movement. What about when we do this? Can we do that? Like, could we take these triangles all the way up? Da 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 da. Separated by consolidation, which, I mean, I could easily slap a triangle on that. Here's the return back to the triangle, of course. Anybody that expected anything else, I mean, the triangles are intended to be returned to, and when we return to them, it is official that the spike has been formed. When we exited the triangle, we left with the same velocity that we returned back to it, making it into a spike. Now it is official that we do have a spike out of the bottom of the triangle and out of the bottom of the green zone.
I put a trend line there, John, right from the bottom, and I just put it to the bottom of that second spike, and it just followed right along. That's where it met its third resistance line. Yeah, basically.
Yeah, nothing wrong with that. Like, you could call it a readjustment. It's like that trend is far easier to ride up on than this one. Like this line right here, make it a purple line because it's associated with that triangle. And when you can see that the triangle's being used like wicks and spikes out of it and everything, it really insinuates that that line has the capacity to make wicks and spikes out of it. And when we can see that there's a line that's contradicting it, it too may want those same wicks and spikes. And I'm like, you want to know what's interesting about today though? Is it hasn't just been even. It's been more out of the top side than the bottom. Like, think about it. Like, what about this last triangle? We were given a little sneak peek of what happened last time we made this triangle right here. No, we have to be able to see through it. So that triangle right there, it did spike out of the bottom. But what it did out of the bottom was merely like, well, it was nothing in comparison to what it did out of the top. We went out of the top like multiple times, 4 times, 5 times, right? Whatever, you know, out of the top than we did out of the bottom. So I'm like, that's cool. You could say we tried to double the range, not really, but yeah. An N wave, you know, it's true. We do have an N wave here. When do we do that? I mean, I'll tell you, the N waves. Interesting. Huh. You know, that sequence has to form every time we do a 5-wave move. Like if I take this here and put that there, like there's only one move that separates it from being a 5-wave move. Like it's like you really see that there. And like this plays a vital role in its ability to be an effective pullback. You know, it's just an observation. But it's true. How do you make a 5-wave move without making 2 ends? And it's a shame that there's not a letter that actually is a backwards N like we have this, but there's no there's no this, ironically. So what do you call that then? Backwards M or backwards N, I guess. Which we see from time to time, like here. Oh, that's interesting. It's almost like it did a backwards one and then a normal one. It's like, is it not true though? I mean, it is true. I mean, as much as we may have not seen it before and it could be new, we can either accept it or neglect it, right? Well, the market does things that we may not have found in the 1930s playbook, but because it does them many times, we can learn to understand them. Nobody has to tell us that they exist in order for us to understand them.
So it's true. One thing I find intriguing about this as well is the fact that we are expanding. Everything that we've done since we've started the triangle has led to this kind of expansion where undeniably it's been... I gotta get rid of that so that we can't have that problem. Okay. So we can see like that it's true that it is expanding outwards. The moment that we test that high again, it will be the case. Now, it's not true that it has to test that high, but in the event that it does, it will be the third expansion. Typically one that's interested in the first of the three. So anytime that we make 3 highs like that, you know, we could be interested in getting back to the first of the 3. Prime example right here. Sometimes it does more. But what it means is you better be profitable by the moment that it hits that level, because sometimes that's all it gives. And the market likes to test people like that. It's like, yeah, sometimes the exact target that we specify should be the only thing that you go for. And by that moment, everything has to be safe by the time that we hit that target. Anything you choose to continue run should be with a profitable stop. So in the event that that stop is profitable, your account is reflected profitably through your entire trade and the entire endeavor. And then you can hold whatever's left. Because if you know that it's going to affect your account positively, no matter what, why would you feel emotional about it? Becomes the question. Because I know people find reasons to develop emotional obstructions, I guess you could call them, to the trades that are the most lucrative. And it seems to be humane to do that, but this triangle is coming to an end. We did spike out of the bottom and it led to a spike out of the top. Now I'll tell you one thing, it couldn't make it even because of the red zone on the other side. Now the red zone itself did do its job of leading back to the green zone, but just the green zone this time, so far. Now we can see that where we are in the green zone is also in a gap. Could we be interested in putting whatever spikes that we've made out of the bottom of this node on top of it? Well, I find it suspiciously particular that the movement that we've made out of the bottom of the gap so far would get us to this little point right here. Which, I mean, yeah, sure, it doesn't have to be straight off this level, but we're very likely to be interested in getting to that point. Further wicks and spikes out of the tip of the triangle. You know, with the new line at the bottom there, many people will consider that the triangle, but I don't think that anybody would want it to go more sideways. And I think that I think there's a good chance at the end of this triangle we could end with enough volatility to really put this channel to the test. If not, we're waiting for the other one anyways. It is true. So best thing we can understand is that things could change at the tip of this triangle as they did the last one. Now, what happened at the change of the last triangle? Is it true that that triangle ended and we produced like literally the same triangle again after it? Like we doubled the exact portion again. Like we took the area that it consolidated and we took that area and forced it out the other side with absolute precision. And it did it doing this weird like N wave twice. Did it twice. You know, did that N wave twice. And that's fine. Another spike yet again out of the bottom of the range. Close to the 61, but not quite, right? I'm like, what's up with that?
see enough 61s, you'll be able to see where they are before you put them on, and effectively you can develop, you know, what's the word? It's kind of like it irks you if it doesn't get hit. You'll notice if it doesn't get hit because it won't be right, because there's a right way for it to move, and if you notice it's not doing that, well, that means that change has undeniably shown itself. And we can mark it down and say that, hey, this is a change that it made and it decided to make this the way, and there's no taking it back. It's true it could have hit the 61 there, but it didn't. We know that. That's information that we factually understand. Whether or not it was significant and you took part in it does not matter, but we do understand that that was the case for that move. And could we see that continue in other moves? Would it be so bad? No. But one thing that this is doing is getting right to the tip of the triangle, and that's one thing that I noticed with all the other triangles of the day is, geez, does it ever pay to give it the time that it needs to get to that tip? Because if you assume it's not going to be at that tip by the time that it's there, I mean, you've been hoping for it to do something that it essentially hasn't done, and instead it just grinds and stays at the tip. It's not like Warren Buffett's making bank off of this either, you know, like literally everybody is waiting. You know what I mean? So it's like, doesn't matter how good you are, you're waiting. That's the irony of it. Either you have the patience or you don't, right? And it's interesting when you think about it like that, because every consolidation that you've ever seen has come to an end to get to this one. So what is so bad about this one? Is it because it's current, you know, that we feel the stress of it being here? Well, we can clearly see a potential end. I mean, like, it's like you're driving up, you know, to a stop sign and you're like, oh yeah, you know, you can see you're going to get there. It's like, it's a matter of time before you get to that stop sign. You're going to have to do something about it. I'm like, it's a very similar situation here. We're going to get to the end of this and we may have to do something about it. You know, it's, the variables can change. The confinement area being so tight can end. I mean, like, what other confinement areas have we had of similar size? Could they be involved with this kind of, could they be involved with this kind of similar kind of move? Well, I'll tell you one thing. The angle that they use right there, it's not very similar. Hmm. Safe to say that we're spiking out of the triangle more than we have been spiking out of the triangle. Not quite as much as this time, but it is more than we have out of the last two times. And it's true that we've spiked twice out of one side. Last time we spiked twice out of one side, it led to the other side. That is a fact. Doesn't mean it has to again, but it is the case that it was that way. And if it is that way again, well, God forbid you obstruct it from being that way, because it's clearly shown us that that's the way it wants to be. So, I mean, it will change in the future. It doesn't mean it's going to be like this forever, but you can see it's been very particular. And to allow it to have those particulars until this obvious triangle ends is not so bad, because wait, well, like, let's think about it. If there is a certain characteristic or there's a certain way that it likes to trade and it's confined within two barriers, maybe that's the way it likes to trade within those two barriers. When we knock down one of those barriers, don't be surprised if that way changes, right? So the way that I think it is right now is super crappy and tight. We end the consolidation. That tightness and crappiness could be out the window in the name of the next thing, which sometimes makes itself more clear than others. Right now, I'm like, all right, let's say we end the triangle. Is it true that the red and green zone disappears? No. We will still have the red zone and green zone even if the triangle ends. That is true. The POC at the top of the range has been completely hidden now. Do you remember back, like, not even an hour ago, we had a node on the bottom and a node on the top, and this was actually the POC? We came down and stole the POC and hid the fact that there was ever even a node up there. You don't even see that node anymore. It's interesting that that's the case. Only the people with the information of the beginning of the day, of the whole day, will understand that that's the case. You know? And I like that. I'm like, not many people can even go back and say, hey, I'm going to look back at the chart and find out that there was a node there. Well, I'm sorry, you can't, because if you look back, there's no node there now. You had to have been there to understood that there was a node there and to understand that it is hidden now. That we've put this amount of volume here, right? And that created a node. And then we put this amount of volume here and that created a node. And then we put this amount of volume here and it filled in the space in the middle. So that there's no separation between these two nodes anymore. We've done something in the middle to fill that space. And now with that space filled and the tip met, maybe the purpose of this consolidation has been fulfilled. And could that be the work of the public? Oh my goodness, no. They're not even aware of these red zone and green zones. The guaranteed 80% of the people are not. But it's not the 80% of the people that actually matter, in my opinion. It's the 20% with 80% of the money. And that's Wall Street. They're the 20% and under with 80% of the money. And it's more like 10%, but it wasn't always that way. In the 1930s, I think it was more like 20. I think that the people had far more, and they had far more control and far more impact and far more value. But now things have changed. The institutions have grown to be far more powerful, and the people, the individuals, it's very hard for any one individual to ever be able to catch up. So I'm like, well, one thing that has never been the case for the longest time is the people being able to unanimously work together against the institutions. My dream one day will be to make that the case, but we'll see. People are very not responsive. It's hard to make people do the right trade. People will fold under the name of the pressure of the profit. It's like a 5,000 point trade might mean tens of thousands of dollars, but because somebody's never seen $3,000 before, they might fold under the pressure of the profit, therefore giving up their exposure at the best price, not being able to fight for it back and get as easy of a situation as they once had. Very common. Now, this is a lesson I wish I could teach people before they have to learn it the hard way. The red zone yet again leads to green zone. It's not it's not exhilarating, it's not exciting, it's not stimulating, but because it's not any of those things, you could expect it to be having an adverse impact on most of the people associated with the moves. So how's it going to impact their ability to stick around? Very minimal, right? So I do believe this consolidation is closer to the end than the beginning. And when we end this consolidation, I would not be surprised to see it move like it did at the beginning. Big, clear, cut, nice moves without the obstruction of the public. Because like I said before, if you have 1,000 people long, right? Let's say 1,000 people went long and they all have sell orders up here. That means if you're a big institution, you've got all the money, right? And you're long from even lower from weeks ago, let's say. You see that 1,000 people have to sell up here. That means that if your position is 3,000, let's say, and you want to get it up here to be able to sell, you have to sell 1,000 of your 3,000 to be able to make it through that level. That means that at your target, you'll only have 2,000 to sell. Now the hedge fund manager might be like, what the hell? You didn't sell the whole thing up there? You sold some before? What are you talking about? That was the target. You're supposed to get it there. But there was 1,000 people in the way. Well, what are you supposed to do? Get rid of them. Where are their stops? Well, at the end of the day, if they've bought right here, where are their stops going to be? Right down here? Well, let's say we take this 3,000, turn it into 4,000, acquire their positions, and then hit their targets without them being in the way now. Because they won't have anything to sell if they're not in the way, or if they're not in the position. So they'll be out of the way. Do you think this is a tactic that's used against the public regularly or not? And if not, why not? And how would we ever catch them doing that? And if the public just thinks they're trading against Tom across the street and that people aren't doing this to them, they're completely oblivious and easy to become victims. So I'm like, well, you can either accept it or neglect it. But these strategies exist and they're being used against you. If you don't understand them, well, you're all the more easy to
to have it work, to make it work, because the only reason that these things happen is because they work. And I'll explain them every day in different ways. I don't expect everyone to understand them right from the get-go, but it is the work of the biggest money players to do these things and to ensure that the people are exactly where they should be. And you can see a lot of the people, they trade right in this middle area here. A lot of them, because that's the area that the market has spent its time, they feel obliged to trade in that area. It's not because of the fact that it's providing incredible opportunity and they can't take their hands off of it. But from the moment that it wanted to meet this level, it was merely an obstruction, something that we had to grind in order to get through. And now it's the case that anything we've ever done on the bottom of this triangle has now been presented on the top and more. We've now hit my target that I put in there. Remember that target? Well, I just put it in there. And now it's at it. It's not a B point, but it was a target, so I used a green dash line anyways. At the end of the day, we managed to produce everything that we did out of the bottom of this level, out of the top, and some more, just to get to that target. Because like I say, if I was to type in this, oops, that's the legend, just a reference. The name of the game is to break the yellow lines so that we get to the green dash lines. And in this case, that's the way things went. Now, we can see that the amount of volume that we have inside of this area, it marks the tip of the triangle. When we pass the tip of the triangle, is it not true that the way that we trade is now different? The way the market moves is more concise, it's clear, and now I just want to point out that we are on top of the red zone. Not for as much as we went below the green zone, but could we be interested in that? Well, I'll tell you one thing. We did respond to this this 261. This 261 goes all the way down to this B point, and it's the case that it did not get to that B point. It just got to this 161. Because if I apply those fibs back on, and we take a look at exactly what they look like, you can see that this right here was a 161. And effectively that 161 brought it down to the B point, and then the 261, which is up here, brought it down to the 161. You can see that it brought it to that 161 right there. And it was
61 too, John?
Yep.
If you just take that B point too.
Yep. This little B point in here, you mean?
No, the one at let's see, where are we at?
1122.
1020, 1015.
And
1015. You take that down. 1015.
Yeah.
That one down to there. Yeah, it's 261 too at the top. That's the one I was looking at.
That's the 261 up there?
Yeah.
Oh, that's really weird, because I was looking at a completely different one. I was looking at this one.
I know.
There's a double 261. Now, you want to know what that reminds me of? Is this bar. Yesterday, we had two 261s lining up, and I was like, well, because they're both there, I'm going to highlight them both with a bar. The bottom of the bar was a 261, the top of the bar was a 261, and everything in between was a 261 as far as I'm concerned. So I'm like, and then it was...
all over the place, but they're pretty prominent.
Yep. But we did have the case that it lined up two. We had a 2 in 1 yesterday.
Anything I've taken today has been a 261. So.
And it's interesting. Yeah. Yep. Now you want to know what that since the 261 has been relevant. It's been since we've been involved with this range roughly up top here. I would say over the past few sessions, we've really started to throw aside the 227 in the name of the 261. And the 241, we were seeing those fibs, and I mean for years, the 227 and 241 would be like, why is this even on here? It doesn't even work. It's always the 261. And then we saw that it couldn't make it to the 261 for a prolonged period of time. And it was like, well, unless you go for the 241 and 227, you're not going to be getting the reversal, because it never made it to the 261. Now, every predominant reversal that's on the screen is a 261.
You know, like what about this one down here? Like, was it a 261? Like this right here? No, 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 no. Curious about it though. This is a 341. Interesting. Anyways, we did get a 261 to a 261 today. Now, we've seen many 61s to 61s, but to make a 261 to a 261 reminds me of, like, if I was to tell you to take the cursor and draw in a W that leads to a 261, and then make the M have a 261 also, you know, could you draw it in? You know, close. 261 to a 261. So like that, kind of like that, yeah. So you can see that the reversal on the top was a 261, and the reversal on the bottom was a 261, and it could come from an M into a W, or a W into an M. That's fine. And we do stuff like that here. Except the W came from all the way out here, and the M that corresponded with it was all the way up here. But it's true that they were both the pinnacle of reversal off of that 261. There was no better place to be in from than those levels. So should we consider them in the future? Well, I'll tell you one thing. We're about to be getting to the 261s of these levels here. Like we're up there. Like the first 261's gonna get hit, and I'm like, well, you wanna know what's funny? Is we've basically played out off the 161, just like we did here. You know, you see this W right here? It played off that 161 perfectly, and then it went off the 261. And I mean, like, this one also came off of the kind of off of the 161. I'm curious about it. But it is the case now that the people of this 261, if they just traded that 261 and they didn't recognize that that B point was already hit, it's true that they've made a position at that 261 that didn't get all the way to the B point. But they had to be comfortable with it getting to this one. They had to be comfortable with that, and they would have had to notice the 261 on the reversal side. And the risk of it not hitting that B point had to be clear to them. And instead, they had to find value in hitting this B point over this one. And what's interesting is even when we were down here, if you look back in the recording of today, there would be, I made it gray. You know, I grayed it out originally, and then I made it gray again because I wasn't feeling it. After all this one's hit,
Scan resistance of the 241 up there.
I was just talking crap about the 241. Let's see. It's like, where's the 261? But where are you getting that 241 from? Is it a bigger one?
No, 1203.
Oh, okay, okay. 1203. Oh, that's a short-term one.
Yep.
Oh, that's way down there. That's a weird one. Interesting. Like, okay, I can
But I mean,
see.
I've drawn a trend line too from the bottom here at around 1152, and just you know, poking around up. You know, yeah, just like that, and give me an indication as to when it's going to come down.
Yeah, the thing is though, is those trend lines have been causing problems lately. They haven't been coming down immediately. And what it can be like is maybe like this one. It's like, sure, it can cause a little bit of a dip, but then it all comes back anyways. And I mean, it could be a smaller version of that where we could expect it to dip halfway, like it did here.
Yep.
And maybe that would be it. Because stepping on top of that gap instead of breaking down into it would be the first step in the right direction, I guess you could say. Because I mean, I guess we're through the red zone again, trying to turn it into support, but that's tough game. Especially when it's got the time limit of that trend line that you just identified. It's definitely like running out of time to grind the red zone. If it, you know, it either has to pick the red zone or this trend line. One of the two is gonna have to give up. See that line right there? I question whether or not it's going to have a fake break, you know, I really do, because it's put a hell of a lot of volume here. It's got something to stand on if it wants to. That's the irony of it. And it looks like it's really trying to do that. Everybody that sees that it was here last time and it grinded last time, if it pushes for a third high, they might think it's going to do the same thing again. And it might just give half. You know, it's not impossible for it to do this. One thing I think that's been really important is the VWAP bands, ironically. I think they've been playing a vital role in this crappy range up top here. And we kind of broke through it, stepped on top of it, and the average counter trend pullback would be so appropriate in getting back to it. Like that's how much we used to pull back when we pulled back. We mustn't forget that this area, this appropriate size node, this is huge. Like what's up with that, eh? We have a huge node here and we think it's not going to be used. It very well must be allowed to be used. It was before. Oh, I didn't mean to bring that one over, but it's interesting when you can see that the amount of time and space. You know, I wonder. Oh, it is strange how they have two there as well. Makes me wonder about this area down here, whether or not it has some sort of impact, because it was the strongest spike we've ever seen today. That spike is an interesting distance. It's almost like the distance that we did here. It's very interesting. All you know, it's incredible what you can get when you look for the similarities. That distance right there was a distance that we did totally use again in the future. Is it not interesting that it began with this consolidation here? And is it not interesting that this one ended with it? So I definitely see that. So you could say that this portion is in association with this one. Well, it has been. Undeniably, like it literally has been. So I'm interested in that. That's a distance that we've been comfortable with making on a regular basis. Oh wow, yeah, that was two right there, exactly of that distance. Kind of intriguing. So yeah, we totally just made this. And see it's interested in the B points on the underside. Very much like a deja vu situation from what we saw earlier in the morning, to be honest. It reminds me of how we did the M into W. Like it reminds me of that. Like it's got sure a W into an M, but it's very much like it's filling the bases. Like it's like today, ladies and gentlemen, we start at one point, make a move down, end up making the largest move in the opposite direction, ending up at the same spot that we started. Is it not true that we do that here? It's just got two moves that are different, and everybody thinks it's really different, but I'm like, no, it's just the way that we do an S-wave today. And it's got a little bit of flair to it. It's got a little bit of volatility to it. And I'm like, we see this more often than you think. Like it separates most of the big moves that we've ever seen today. You know, on both sides of those moves, we've had incredible distances that we've seen formulate so perfectly on either side of something that fits the middle so well. Notice that it's all part of it happening right there again. Incredible mathematical phenomenon. The work of the public, unlikely. So it's really, really interesting when I see that. And then for it to, like, you know, be the 5-wave move down that literally on a dime had 3 consecutive lows, and then you can see it made 1, 2, 3, 4, 5, and then it made 3 consecutive highs, and it did end that trend, you know, a little bit more so than I even thought it would, to be honest. But it cut off that B point, which is another expectation that we had. Don't you find it interesting that it just managed to pull back this much? Like it was supposed to. It was like the trend break didn't matter in the name of making this pullback and only this pullback. And I'm like, very intriguing. It's almost like there's a way it's supposed to be analyzed. You know, things are supposed to be considered. And I'm like, I'll be damned if we don't consider these things, right? So, like I said before, I think we're closer to being able to do this than ever before. You know how close this is to what we see here? Like it's all still 5 waves when we do this. It's just a really effective method of movement, and I think we're going to get that more of that. Yeah. Anyways, it's incredible.
This little move here was just a 261 short term, very short term.
Oh, really, really short term, yeah.
You happen to know the cloud on the MACD?
Oh yeah, yeah, yeah. But the bars are not below 0.
Right.
Or were you looking at something
Oh,
else?
no. Just have a look at the like just the positioning of any time the cloud, you know, is the cloud produced, and we got all the lines up top. Then yeah, you're good for points. You're good to go.
Yeah, I like that. When we've been trending in these environments, it's nice to be able to see when it finds that comfort. Like, you know, it can be used in conjunction with like this average pullback that I've been saying that we do very regularly. And it's like, well, in the event that we can see that that average pullback has a certain characteristic in the momentum, like, hey, every time we have an effective pullback that pulls back exactly the amount that the average counter trend move does, we can see that there's a specific divergence or effective you know, cloud maneuver that we can see sends it up every time. And I mean, like, you know, not always does every single one of those counter trend moves have the same impact, but maybe there's some that can be positioned in certain ways to make more of a move than others.
Yeah. But each bottom of those clouds, John, they hit the bottom of the 15-second RSI.
Oh, okay, okay. So
So
that's
that was added confluence.
interesting.
I mean, if you're looking for an entry, well, geez, are we at the bottom? Well, we are at the bottom of the 15-second.
Mm-hmm. The green,
But if
yeah.
you really want, yeah, if you really want to understand the MACD and the cloud in a sort of a bigger sort of time frame, go to the hourly. It's freaking unreal. You'll be able to see whether or not we're in an uptrend or whether or not we're in a downtrend just by looking at the MACD, and you're going to see your entries. See on the if you just even spread it open more, John, so you can see. But you can see here, like where the clouds are and where the bottoms are, and your entries could have been in any of those locations, and you'd be still good to go. And you can tell. See, have a look at the left. You can see on where all the lines are down at the bottom. See, we're all coming down, but we're slowly coming up. So the you know the thing's slowly starting to come up, and then and then you can see too if you want to go short when we're coming down and the lines are on the bottom. If you want to go short, you're looking for shorts. Have a look at the clouds on the top. Any of those clouds you pick, you're good to go.
Oh yeah, so you're looking
You're
at
looking for points.
you're looking at the empty clouds on top while the
Yes.
bars are beneath the 0
Yes.
line.
Yes.
And then when it's going up, the bars are above the 0 line, the empty clouds
Yes.
are effective
Bingo.
points. So
Yes.
you look at this point right here, that's that point. We look at this
Yep.
point right here, That's that point. This point right here, that's that point, and
See how
then
they're getting smaller now? They're starting to converge.
yep.
So we may be getting close to coming down. But what I'm saying is that this works. This works on the hourly. This works on the 1 minute. It's the same thing that I was seeing on the 1 minute. I'm seeing on the hourly. You know,
I like it.
and yeah, so do I.
Mhm.
Like I'm using it. Like you know,
It's
first thing in
interesting.
the morning. Like if I don't catch the bottom, like I know there's gonna be a cloud. And when
Yeah.
there's an empty cloud, and it probably touched the bottom of 15, and hopefully it touches the 15 second. Hopefully it touches the bottom of 1 minute. I'm taking it. Like you know, and normally what I try to do too is like this morning. Came down like at 261, or later on it came down at 261. I try to line up fibs with it, but this is a fine example. This particular one here, unless you were looking for short-term fibs, you wouldn't have caught it, but it came down at the bottom of the 15 second. It's the same with the one at this morning at 12:06, and it's the same one this morning at 12:26. I mean, this is this is pretty consistent here, John. You know,
Mhm.
working on all time frames, showing patience, waiting for these clouds to appear,
I like it.
understanding whether or not we're going up or whether or not we're going down. Like before, when I was opening the hourly, I was saying, geez, are we going up or are we going down? Well, you don't have to ask yourself that question and not really know, because you just look at the MACD. It'll tell you whether or not we're in an uptrend or downtrend. And then you just trade accordingly. It gives clear indication, clear indication.
Mhm.
Like I think
Are
it's
your
for gold.
oh sorry.
What's that, Hanky?
I was gonna say, are your inputs still 12, 26, 9 on that? Because mine's looking a tad different. I feel like.
Yeah, it should be.
Mm-hmm.
Oh, 8, 22, 12. That's for the MACD and awesome oscillator though.
Yeah, I get the same. 8, 22, 12.
Perfect. There we go. Yeah, mine is off a little bit.
Okay.
I do like that, Randy. I'm gonna write that down and keep an eye
Yeah,
out.
I'll tell you, man. You study it, man. It hasn't disappointed me in like a month, man. I've been riding it.
Nice.
I told Ryan about it, I don't know, a week or so ago too, and shit, he's been positive every day.
Yeah, that 261 is starting to get a little bit eager to wick and spike through it. From what I can see, we are also riding a support line that we've broken before. I still think that this one is relevant. It's only merely had a fake break through it. More fake breaks can happen through it, but the most important elephant in the room right now is going to be that 261, the high. And on the moment of breaking it, I can't help but think that we could be interested in doing our typical counter trend move, and that distance that we made out of the bottom of this range, you know, the bulk of that volume out of the other side. Like this amount of space. That white dashed line could have a very, very important role in any movement that we get past. Like it could be on the brink of a breakout, to be honest. I do see the value in it trying to make one of the larger advancements of the day. Even like it reminds me of going back to saying that the 5-wave move could lead to a stronger push. I do think that we are going to have that in store at some point in the near future. Which 5-wave move becomes the major question. We're closer to it than farther from it, I'd say. And I mean, undeniably, we are working our way very slowly through that 261. It's only recently wicked and spiked through it by the smallest amount. See, it's the farthest advancement so far through it. Clear skies on the volume profile. Not much volume from today has been presented beyond this point. So the initial move that I presented first could invite a move back to test these highs. It is acceptable for us to try and test the 261 from above, so no stop should be dragged above it. In the event that you do, it could cost you your position and not give you an entry safe enough to be back in for any move beyond this point. But like I said, the brink of a breakout, and that's what it did. It broke out. Now this is a blue line. In the event that we get on top of it, it is guaranteed that we come back and test it from above. But this is the appropriate distance that we made on top, so it could effectively struggle. I do believe that we will see the white dash line above regardless if we make a test of this or not. This level should be allowed to test, like I said. If you don't allow this level to test, it could cause major problems for positioning in the future. But it is a breakout, and a breakout that's happening on the stops of those that tried to short this 261 and get the B point. Because it's true, like if you programmed a robot or something to short this 261 and your target was the B point, it was already hit and we established that. And off of that level, it never actually made it all the way back to the target. So you could assume that those that did short that level may put their stops above this point, and they were just filled. Typically, what we like to do is come back and pause here for a second, let them think about the fact that they were just stopped out, and then we'll try and advance against them again. So we watch for this spike back to the 261. We can see, just like I said, exactly back to the 261, everything off the blue line. And it was exactly the move that we had below the range too, the one that we were looking at that was the average counter trend pullback, and we made that the distance on top of the range as well, returning back to the 261. Beautiful movement. Now, of course, it's fair game to try the highs again. We definitely could spend some time grinding. Like I said, they need a moment to think about it. After all, it's very common for many people to be put through the same process because it is like a rising wedge that's failed. And the people that tried to get a short out of the rising wedge, where are they going to put their stop? Well, if they short in here and they put buy orders as stops up here and they try to put more buy orders down here, well, these undeniably were hit first. Like in this entire equation of selling, if they tried to sell here, nearly the amount of profit that they were going for was distributed in losses before actually trying to play out. And I'm like, well, that's not very fun for them, is it? But it's true that that's the case. We did have a rising wedge and it blew through the top of it, contrary to popular belief, I bet. So, and it was a spike like every other one, meeting the baseline, coming back to the equilibrium, coming back to the POC. There's no heavier volume node now than this level. We put more volume here than we even did have down here now. More volume here than we had down here. When this was the hot shot level for so long. Not anymore. Now things have advanced through the roof and we've stepped on top of every resistance barrier that was once holding us back, and that's a fact. And it's like, is this how it progresses through every barrier that's presented? These are the means that it's used. It's slow and grindy and sloppy. But everything that was holding us back is now under us. As of now, it doesn't mean it's always going to be that way, but this is the progress that we've made to this point this far. And every bit of volume that we've had underneath, we can see is now under us. and all the movement that we have now, sure, it's wicks and spikes out of the top, but like I said, the white dash line up top, I believe that's an old all-time high. You know, if we go back far enough, I marked that level because I was certain we were going to get back to new all-time highs, and that's how the yeah, that's the all-time high that we made originally, and then we crushed through it to make the new all-time highs. But oh, let me take a look at that real quick. Oh yeah, I remember when the W's were getting cut off at the B point. We could see that the W's were getting cut off at the B point. They were causing major dumps from that point. Go back to 1 minute. Got a couple view apps in there. Honestly, I could think about removing that other one, but I think that the top view app band has been used quite a bit. You know, today, at least that longer term one, it's been used quite a bit. And I'm like, you know, this trend, we literally broke it twice now, and both times have been proven ineffective. It is true that if you look at this movement without anything on it, right? It's true that we made a spike out of the bottom of this range, right? A little bit of a consolidation in the middle. And then we made a spike on the top that matched that we had on the bottom. You know? And it is the case that the volume is distributed like this. You know, even for the amount that it wicked and spiked out of the top, it's like the appropriate amount of spikeage. Like I'll show you how much we've used this in the past. So not only was it here, but I think that we've used it in other environments. Like, and the amount of spikes that we've had, they are very similar in many cases. And for this to meet the equilibrium, this is just one way that we can produce that same kind of pattern that we've been doing all day. This one being the most impressive for sure. And what we didn't see today is a smaller version of the largest, clearest pattern, which is intriguing. That's the closest, but I'm like, nah, it's not the same. Although the amount of movements that we have in there are exactly the same in terms of sequence. But like to the human eye, you would say it's completely different when I take away the scribble and you can see that they're not so different. To a robot, like they would be very similar, but yeah. Because you can see that they result in the same distance on either side, and like we like to separate things very evenly. It's one way for it to do that.
Yeah, we're still going up, eh? You notice that? The lines are still north of zero on the MACD.
Mm-hmm. Yeah, that's the zero line in there.
Yeah, it's such a beautiful thing. I wish I'd known this like my first 6 months when I was doing this. would have made life a little easier. I just thought they were a bunch of lines, a bunch of squigglies, but they actually make a lot of sense.
Yep, they're all based off of the price movements, and they're moving averages that are presented in different ways that give us an idea of exactly how it has moved and how it can move in the future based off of
Mm-hmm.
the
Yeah.
fluctuations.
And the settings you have for that are freaking golden too. I don't know how you ever came up with them, but
Well, I tweaked it to
nice
make
and
it
tweaky.
more attractive to the divergences that I was finding, and
Okay.
I liked the way it was presenting them. It was a little bit clearer because the default settings were kind of slower and harder to get any kind of indication from. Like when it was hug in the middle, it was really hug in the middle, like flatlining. Just wasn't good enough.
Yeah. Like initially, all I was looking at it for was divergence. Whether or not we are having bearish or bullish divergence, and then I just started taking a deeper dive into the clouds and the lines and trying to figure out why they're on top and why they're on the bottom and whether or not we were going up or down. And the lines too, the green lines and the orange lines, and when they intersected, what happens and things like that. So,
Hmm.
but I didn't realize earlier that when we are going up, every time the 15-second RSI and Ninja Trader came down and touched the bottom, that was the bottom, that was the retracement, and then we were going to go up. But what this does is it adds the cloud to it and gives it more ammunition for reaching the bottom where it is, just confirmation and then going back up.
Yep.
So those two basically are hand in hand a lot of times, the 15-second RSI and the MACD
Yep.
on 1 minute
Yeah, I
pretty
found that,
easily.
just one indicator was it was strange when I could see that they were capable of making different divergences. And I found that, finding a confluence between both of them was a little bit more of an advantage. And I was wondering why at some points the MACD is the one that I originated with, funny enough, and the RSI is the one that I added on there to support the MACD.
Yeah,
And that's how it ended up working out. But it's the
but just
case that we pushed to the high again. What's up?
but just understanding those, it's taken me a while to understand and taking a deep dive into it. I did with the RSI, totally understood it, and then how it relates to the market, and then I've had to take about a month here or so just by looking at the MACD every single day and trying to figure out some sort of a relationship is, how does it act when markets go up and when markets go down and then when markets are just basically trending in the middle.
Yeah, and it's interesting when you think about that too, because with everything, it's like you might see a pattern, but do you know how it works in every environment? Becomes another question. It's like you might that works with every indicator. It's like you might see, okay, it works really well. This is how you're supposed to use it. It works like this, and you see how it works, and it does that, and then everything changes, and it's supposed to be used in a different way. Because everything's changed, and I'm like, well, you can try and use it the original way that did work in the past, but it undeniably doesn't work anymore, and then you have to adapt to the new way of using it, or it's essentially in trouble. And the MACD is very much like that, where inside of ranges it can act completely different to where we're trending.
Well, the more movement you have too, right, the clearer the indication is.
Hmm.
So if it goes all the way up or all the way down or whatever it is, if the lines are on top, it's going up. If the lines are on the bottom, it's retracing. It's going short or whatever. Um, and if the lines only go halfway through the shadow, what does it look like? It's just a retracement, and then it's going to go back up. So yeah, it just takes a little bit of study in it to be sure.
Yeah, for sure.
But there's definitely a relationship there because you can see it obviously on the hourly there where it's rudely clear for a lot of points. It's no different than any other indicator. If you're unsure of whether we're going up or down, then just stay out of it. Don't be trading in it. If you're not completely sure about what the moves are, or where it's going to, or just stay away from it until you know, like you always say, until you have clarity.
Hmm.
have those the specifics of the MACD, like the details on exactly how your setup there is on Discord, or how do you have that set up, John, for other people to see them?
Yeah, it is. It is. I've got it in videos as well and everything.
Okay. Yeah, I mean the actual settings, like when you set the RSI at say 14, 70, and 30 or whatever. For the MACD, the same.
Yep, it's all in there as well. Yep, I've got it.
So I don't think everybody out there has the same sort of settings type thing, and I've just worked off of what you initially produced and just try to go from there. Especially visually, it's really nice.
Yeah. So basically, with those indicators, you could just type. Well, you just hit question mark while you're looking at the screen, and this one here, CM underscore MACD and CM ultimate RSI multi-time frame. But I did type them in the chat too. Post a picture of them.
Nice. I think for anybody who's in here, wants to be successful, has to really study those and know how they work. Because otherwise, you're trading blind.
Well, I wouldn't say that. I mean, I use them literally like 10% of the time, and I'm correct like every single day. So.
Well, you've been doing this for 10 years.
Yeah.
I've
Yeah.
only been doing it for like 2.
Okay, I can see it being something. Yeah, yeah. I wouldn't.
It's an added confluence.
It is an added confluence. It is. But there's a lot of learning that goes into it, though. It's not just on face value. Yeah, yeah. It's not like something you just look at it and then think, oh, it's going to work this way every time. Yeah, it's like it involves studying. There's much to learn about it for sure. I would say, and as the environments changes.
And everything else, right?
Mm-hmm.
Know those first, obviously.
Mm-hmm.
And how how you sort of draw your lines and everything else. And volume node too. That took me about a couple of weeks to figure that one out.
Yep. It can be really used as a confluence too. The white dash lines are something that I haven't talked about today as well. That one, it's incredible. I think that we're going above and beyond the blue lines and trying not to break the trend breaks. Like this trend right here is absolutely utterly terrible at breaking. Like it's been the worst trend to break. It's screwed nearly every single person that's ever tried to be exposed to its break. That's the interesting part about it. And I'm like, we don't need to be a part of it to understand that. It's been very, very aggressively it's a squeeze, and there's no way to sugarcoat the squeezes, because the squeezes, it's terrible to be on the other side of a squeeze. People that have shorted it, if they trade options and stocks, you could see that it's simply not enough movement against the trend in order for them to take profit. Futures traders, sure, you might be able to take some profit on those moves, but it's not very much, if that, and most of the public is not able to profit off of those declines. In other words, it's likely that they're either trapped or that they've taken a loss on a lot of those moves. So it's not like that line's not going to break too. It's funny about it is every single moment of difficulty that there has been for those people can be overlapped in the future. One thing that we have to watch out for is the distancing that we've made on the bottom of this range and the distancing that we've put on the top of it. It hasn't really come back to the top of that range, and at any given time, it could feel the need to come back to that node where the POC is. So no stops are safe above it. And of course, any hedges that are taken want to target the high of that range. And honestly, we can see we're running into a gap right now. It doesn't change the fact that the white dash line up top is something of great interest ultimately. No matter what we do or how many times we have to test the high of this node, it becomes an interest for when we've readjusted the trend sufficiently to be able to get there. And I'm like, well, the yellow lines that we have right now are pretty steep, and we could just make them not so steep and then go up. As simple. Is that right?
Yeah, to that B point at 11:58.
Oh yeah, didn't look at that one. Interesting.
Yeah,
26.
because it's spiked to it.
Mm-hmm. Yeah, the 261. It could make another 261. Like this right here could be the B point, and then it goes down to another 261, like we saw earlier. Kind of like, I was saying we didn't get the smaller version of the bigger version pattern of the day, and I mean, maybe this is that. Maybe this is the attempt at trying to make a smaller version of what we did earlier. Now we can see, of course, it is coming back down to test the high of that node, something that we should allow any long traders that are in from below the range should allow it to come back and test the top. Like I was saying, the distance that we make on the top is very similar to the distance that we make on the bottom, and it loves to be a spike. Like if we look at those distances that it did make on the bottom, like what did they all have in common? Well, they were all spikes. As quickly as we left the bottom, we came back every time. Like it was a spike every single time that we went out the bottom. It returned back to the green zone. Every time we left the green zone, it came back. That's my point. And now, every time we've left the high, we've kind of given it that same treatment to the tone of the same kind of move that we've done out of the top of this range. And it's incredible that it's like, yeah, so long as you allowed that to happen, are you not still in? I'm like, well, yeah, I should allow that to happen then, I guess. And if you're targeting hedges, if you didn't make that your target, well, it's a tough situation, right? And I'm like, well, I can see that very clearly that is the case for anybody that's part of this movement right here, that if they followed those specific rules, then they're still in for the white dash line above.
Just barely even. I don't even know if it quite touched the
15 second?
Yeah, 15-second 30, but it was very, very close. Very, very close.
161 as well.
Yeah. Well, this is different. We're talking institutional moves now. Everything that comes to indications, like we're testing the top of the blue line now. Like that's going to happen. We've spiked out of the bottom, and now we spiked out of the top, we know that that blue line is a very, very high risk of hitting. Even still, everything we do on top of that blue line is subject to coming back to it.
It did work, eh, Matt?
Yeah, I did. It's ridiculous, man. It's great.
Nice.
Normally you have time to get the fibs out, but you didn't have barely enough time to get a fib out there.
Exactly, yeah.
You know.
Yeah, that was gonna be a good one, that one.
Through the white dash line. Beautiful. Now allow it to test the white dash line from above. Beautiful movement. Contrary to popular belief, the trends did not break like they usually would, but instead, everything was bought back up to the white dash line, an old previous all-time high. And of course, anybody that dragged their stop above that white dash line is now getting stopped out. I still think it's not safe to drag above the blue line, but of course, we have a blue bar above here, the one that we've been using, over the course of the past few weeks. It never does end. Our relationship with it just does. We can see the interest in coming back to this blue line is relatively high. And of course, anybody that prevented that from happening no longer has a position. It is the case. It's incredible how much the market is interested in. The spike that we had on the bottom is very equal to the one that we had on the top. Equilibrium has been met. The B point, I suppose, hit. But in this instance, it wasn't just the fact that we had a B point that was making it attractive. The fact that the blue line was positioned as it was calling to make it the distance that it needed to be. And first it started with the need to come back to the white line, then it needed to come back to the blue one. Just the way the cookie crumbles. Now we will see that white dash line again. It is a fact. I am absolutely confident. It is the old all-time high. I do believe we'll see a new all-time high in general, but maybe not on today's movement. That's not the all-time high that we recently came off of, but the first one that we made. And I'm like, short term, I like to see it hit, but ultimately I like to go for the real all-time high.
That's like just past 69, I think.
Mm-hmm.
On this.
Ultimately, we could get plenty of gyrations before we make that advancement up to all-time high, but ultimately, I do believe we will. We are on track for it.
Visa really taken off today too, or not Visa, but Microsoft. Sorry.
Let's take a look. Interesting movement right there. 261 denied back to the 188, but notice that the 188 played out to the B point, eh? Isn't that interesting that it was considered played out and then the 261 just brought it back to that 188? This is a phenomenon that is going on, and we must consider this old pattern where we have a W and it plays out from the 127, plays out from the 141, plays out from the 161, plays out from the 188, and it doesn't need to play out again because it's done all of them. It's considered every single one of these played out from the previous time. So it doesn't need to come down from the important levels anymore. Now, it doesn't mean that it won't in the future, but not from any regular level. because it considers it's like it's covered the bases along all of the levels as it's progressed through the highs, and it's quite intriguing. Let me take a look at the long term. We're approaching a 261 in the long term there too. That could be feisty, because at the end of the day, we've got this much distance here, this much distance there. I do think that like that amount of distance is like very suspiciously particular, and you know, we've got a W that could turn into an M.
You think it'll come back all the way back down to the
Uh,
100?
well, it could certainly try. I think that that level right there, at the very least, could offer a short-term trade back down to this high right here, and then any further position that you have through that could target these levels and below. And the thing that's interesting about that is this movement that we have up here, that's on top of that level. It is the size of the level, and it might be just what they get below it. Maybe there's a chance that it doesn't get all the way to the B point. Like, okay, here's one for you. If the 261 is the reversal point and it reverses at the 261, will the B point be a 61? You know, that's an interesting question. Oh yeah, of course I can't draw it like that. I've got to draw it like this. So why is it the case?
Yeah, 61.
Yeah.
Yeah. Huh. Nice. So shorted at the 261.
Definitely depending on how it gets there. You know, they have earnings right here. That could be the ticket to it. The high volatility on the earnings, because you can see previous earnings, like when we make the earnings, you know, it broke that trend. When we did earnings here, it broke that trend. And
Interesting.
it's capable of reversing on earnings.
Yeah. It never went back to the other B points down below. You notice that? When it broke there midway?
No, it didn't, yeah.
Didn't go all the way back down.
See, that kind of looks like the short-term picture. See, like, oh, that's not even the short-term picture. That's just zoomed in a little bit there. But I'm like it's doing the same thing it did here, which is weird because this one, it went right through the 261. And hold on. When we go down here, we see that's the 261. Yeah, sure. It gave it a little bit of trouble and whatnot, but I mean, hardly. And then I'm like, okay. Yeah, it was the case as well that when the 261 was up here, the B point was the 61 also. It was the case, and it didn't return to it. So I'm curious about that. And then I'm like, well, I can see that when we made this W, it ran up on a really long D leg, and then how it consolidated was kind of similar. Like it started with this kind of movement right here, and then it started to contract into a smaller area. And I noticed that this one had a similar kind of movement here, but then if we look here, it happened at the same point. Oh, actually, hold on. This one actually has that same kind of expansion. And they're all associated with that W being an elongated D leg. And this one also being an elongated D leg. And every time that it gets to that point up there, then it's interested in acting like this. And what's funny about that is it starts the process again as a smaller version of its original.
Yeah, smaller version of the original big self. Yeah.
Yep.
Okay.
But I mean, the third time's typically a charm. It can't really make. Well, I guess it could make a smaller version, but I'm like, not on this time frame. This time frame, it insinuates that as we do one pattern and it becomes smaller and smaller, like that technically allows us to be able to draw a rising wedge over it. If it truly is doing something that's large, smaller, and smaller and advancing throughout the entire process, and becoming smaller, the entire area could be converging into a tip, and it is it is doing that. So that's very
Something to
intriguing.
keep in mind then.
Yeah, it is something
Yeah.
to keep in mind.
Because I look at it about once a week, and I hadn't really looked at it that way. I knew it would hit at 241 up there, but looking for a double top. But
Hmm.
yeah, it's interesting.
Yeah, it's interesting. Oh, this one is not meant to be looked at on long term. A lot of crazy lines there.
But earnings, yeah, is very important with that.
It would seem so. Yeah.
Yeah, yeah.
Yeah, the market doesn't have something like that, so it's like intriguing. Now, this original symmetrical triangle had a support line that I doubled in order to get the blue line at the top, and that basically gave us this bar right here. And for what we've done, like forgive the unevenness, but whatever we did out of the top, my main point is what we did roughly in the middle and on the bottom. And those are moves that could insinuate the end of our relationship with this area. The the VWAP bands are being used in a very intriguing way as well. You can see that the original symmetrical triangle support line that's only ever had wicks and spikes below it has now actually officially made it beneath it and retested it effectively. Now, what we've done on the way down is very much like a 5-wave move. It is true that there are 5 components to this, and now by this point we can draw a downtrend on it because of those 5 waves. And it's true that the 5th wave hasn't exceeded the 4th, but it's rather like it's obstructed by the amount of volume that it has below it. And instead, interested in breaking the downtrend, we do have a B point that's untested up here. Not a white dash line, but a green one. It's interesting to me to see that everything that we've managed to do below the 261 looks like it has, you know, kind of formulated on the high of the 261. A very,
At the POC
yep.
for me. Yeah.
And that POC marks the middle of that area where basically we made that spike on the bottom and that spike on the top, and this is the point that separates the two. We're basically going for that B point. We're immediately after we're going to be interested in hitting this one. So it goes without saying that no stops are safe above the untested B points, or any stops that obstruct the B points from getting hit are subject to getting hit. So of course we've hit this one. We can go ahead and apply fibs from high to low. We can see this is all happening right in the middle. Many people will acknowledge this is a head and shoulders, as it is a fact that it made a left and it made a high, it made a, or it made a head, made a right, and here we are. Now the funny thing is I believe it will go through the right shoulder. I think this will fail as a Google pattern. That it effectively has hundreds of pages of this working, where I think that it gets to the neckline and suffers more than usual. Like a lot of people, like if they see this pattern, they might be on the fence about getting in right about here. And it's funny because a lot of them like to get in here. And where are they all going to put their stops? Well, they are going to put their stops roughly up here. And that's the level that nobody wants to have to pay for right now. Notice that this level did get hit right after. And I can see us setting that up right now, where yet again we have another yellow line, which its job is very similar to the original yellow line, to break. And it might not be as effective as the original one, but it ultimately does break with the intent on failing the head and shoulders, which is fine. Keeping in mind that the POC is being dragged around as the amount of volume that's being shown on that is directly in proportion to how much is being shown on the screen. Like how many candles are on the screen will determine how much of the volume profile is being shown. So it can give a distorted view of how much volume there truly is in this environment relative to how much we've actually put everywhere. Like if we look at all of the volume today, we're not even close to a POC up here. This is just a high volume node. The real POC is way down there. And I'm like, well, that's the case. But if we look at all of the volume that we have done on top of the range and only that volume, then it gives us the volume that we've done on top of this range and exactly where the POC would be here. So out of all the movements that we've done up here, this is the heaviest volume node out of all of the levels. And what's funny about that is it's true that that level has not ever been the best price. And it's always been overlapped. Oh, under no circumstances has any other level been overlapped more than that one. And it's ironic that people choose to trade at that level because of the fact that the people that are there have been made into losers more time than any other people that have traded anywhere on the chart. And yet they find more value in being in a place that I would say would be more stressful to be exposed long or short from in this entire environment. Because let's think if you started from the beginning, long or short, doesn't matter if you're long or short, it's come back to make you into a loser here or here or here or here or here and then here and then here and then here and then here. How many times is that? Too many. It's not worth the headache, right? And I'm like, geez, here's another time. Literally, whoever was exposed with that just got made break even again. Doesn't matter. And I'm like, wow. Again, they were made break even. So everything that they've been fighting for has been taken back to the point that they've started at. Doesn't matter if they were long or short. And it's a mathematical fact, right? So, and I'm like, well, this is displaying of retail trading volume. Doesn't explain where the institutions are in from. Contrary to popular belief, it's not all the volume. It's the volume that they want you to see, and the volume that everybody else has. And this is a great explanation of how most of the people are positioned. Where you look at the highs and barely anybody's traded there, at the bottoms and barely anybody's traded there, and most of the people are set in the middle where it spent most of the time. And it's like if you were to randomly trade without looking at the chart, there's a good chance that you're going to end up in this area right here, because think about how much time it's spent at the best prices. And out of all of the time that we have here, what are the odds that you pick the right direction at the right time, that it's making that small sliver of a reversal that offers you exposure to the biggest moves that there were? It's interesting. Well, I tell you one thing. Exposure to the yellow line, or sorry, this white line was first. The blue line was second, and by then you should have made enough profit to keep as much as you can have now. If you've managed to take profit at any of the other levels that we've crossed, including the low of the node, it's your ability to be able to keep your stop at the extreme and have that exposure to whatever comes tomorrow is really key. And I'm like, well, there is a report tomorrow morning, and at the beginning of the day today, what did I say? Well, the best way to position ourselves for tomorrow is to capture a long trade at the beginning of the day, and then to have a short trade at the end of the day that contradicts that long trade. Basically, if you have an NQ at the beginning of the day and you've managed to, or if you're doing the three trade trifecta where you've managed to take off 3 contracts and you're left with one, you can focus on trading 10 or less MNQ against that. You know that you're constantly going to be contained within your 1 NQ and you're not going to have more ever. I say to use half or less usually, so 5 or less, because that means you have to lose twice at the same level to catch up with how much you're making. So it really becomes less risky to fight against a trend that you know is going to be developing. And I mentioned it. I was like, all of the short term trades that you take against this long trade from the morning should be made with aggressive stop taking, so profit taking and stop dragging. So you want to make sure that you're dragging your stop into profit regularly and taking profit where the profit targets on the short term dictate. And anything that you do choose to let run should be on a profitable stop, like I mentioned, and you should expect it to get hit. So it's like if you're going against it with the mindset of the three trade trifecta, you would want to be going in like 3 and 2 out. So like if you use 5, you want to take 3 off and at maximum let 2 run, which is really not that much. But you know that every single time that you've ever tried to let 2 run short, it's been stopped out to this point. So it was a good idea to take most of it off every time. That's my point. And at the end of the day, if you've kept the long trade, you've benefited off of all of the upwards movement on NQ. And if you've traded MNQ against it, that is the best way to have done this environment, essentially. Um, the in order to be able to justify trading NQ, you may have to build up a cushion on MNQ first. Like I say, if you are interested in building that cushion up, you may, you know, go for your first few successful trades and then monitor that, finish your day and everything. Notice that, hey, you've managed to stack up, let's say 1,000, a profit. You can use 500 of that profit on NQ. If you lose that 500, you have to make another 1,000 on MNQ before you're allowed to lose another 500 on NQ. So you're constantly moving forward by 500, and you can use different variants of this, but by no means are you working with anything but the profit that you've made. So you're only taking a risk off of the slow and steady profit that you've built up on MNQ. Because at the beginning of an account, when you don't have the ability to take much risk, it doesn't make much sense to go in with NQ right off the bat. You want to build up a cushion. You want to build up something that you can actually work with so that you're not built like, using the first initial amount of your capital. You want to build up those small profits so that you can afford to take a risk, and you can justify taking a risk because you will be able to explain the fact that, hey, I've built up this much profit. I'd like to be able to use it to be able to take a risk on a trade that I can say fits the parameters that suit my risk tolerance, and you stick with that trade and fulfill that trade as it should be traded. And basically you can work with that profit the next time that you're looking at taking a risk. And basically if it ever goes south, then you have to work with small size to build up again before you can afford to take another risk. There's no digging it out with the same size that you built the problem with. It's patience and discipline that would be required in order to get yourself out of that situation. So you know come that situation, you can have an idea of a sound plan, rather than let the emotions overcome you, because typically that's the case. People don't understand what to do in the event that they've taken a loss or something like that. Well, first thing that you want to do is reduce the size, focus on the next trade, not the last trade, and understand that it may not present itself immediately for you. Typically it won't, right? So you have to be patient for it, and it's hard to do that. It's one of the hardest things in trading is if you've taken a setback and the market starts to consolidate or the day ends or something like that. Well, there's nothing that you can do about that, right? So you have to be patient for the next fish that comes along, the next time that you find an opportunity that you can take advantage of. The only thing that you can do is be ready for it. You know what I mean? So that's the case. So here we are in another triangle. Remember earlier I was going over how some of these W's couldn't get through the B points. They invited pretty substantial spikes out of the bottom of the range. So curious to see what we managed to do with this one. It is a triangle between these two yellow lines. Could make that apparent with this shape right here. The white dashed line, I do believe we will see it again regardless of any spikes we make out of the bottom of this triangle. Just remember that the highs that we're making right now are in conjunction with the high of this node, and all of the volume that we can see presented in this area here, it basically forms an edge at this high, where we can see the only thing that makes it through that edge have been moves that have come back as quickly as they've left. Spikes, I like to call them. And That's the case with them. And on the bottom, we have the same thing. So it's like symmetry around the tip of the triangle. The POC that marks the tip, the heaviest volume node, the level that we've made people into losers 2 more times, doesn't matter if they're long or short, ironically, since I mentioned that. Because it's went through that level, you know, more, and it's just like overlapping them again and again. It's very stressful if you think about from their perspective. It's not a happy time, right? Because like a lot of them, they're still waiting for whatever move they think is going to happen. But essentially, it's a gamble. If it wasn't a gamble, they would have nothing to feel emotional about. But this, it, I can see that anybody that has made a decision from that point, it's been one that was on uncertainty, right? So I'm like, well, it's uh, it's only been rough on them, and I think it's about to be over. So, ironically, many of them will have folded under the pressure of this sideways consolidation. I do think that, I have a saying, consolidations invite capitulation, and capitulation means, people give up on things, or when people surrender, essentially. That's what it is. And, it's one thing that you can find people saying, I can't take this anymore, And like a lot of people look at the chart like this. You can find like 80% of the charts, even if they're day trading, will have this. Like they'll just look like this usually. And many people, when they see a lot of information, they think that you have to comprehend all of it at once, and that's incorrect. At any given time, only one thing is considered, and any one thing I can explain in under 2 minutes fully to give any human being over the age of 8 years old the information to be able to understand that tool effectively. So it's kind of interesting. And now what we have here is two evenly sized spikes, which have been used in the past to create large moves. I can't help but notice that we have the tip coming up, and that's going to be something that can increase volatility. At this moment right here that we have, I call this like the dead zone. It's like the calm before the storm, you know. It's like a barcode sometimes in there. Like the SPY, it's probably dead. Let's look at it. Like, that's terrible. It's losing its composure. Its ability to be able to print a candle is starting to suffer. I mean, like, it didn't used to be like this. They used to care about it more, but now they don't. And seems to be all about the Nasdaq in terms of where the money's at, because you can see it moves with crispness even in the consolidation. It doesn't lose its composure and start looking something like Ford or something like that. Like, what's this? Why is this allowed? How is this on the Dow? But you know, it just blows my mind sometimes. But I mean, without that on the Dow, maybe it wouldn't look so crappy, right? But people need to be more comfortable with change, I think, in this industry. Everybody specializes in the way they want to see it, and when it changes, it's very tough on them. That's the truth of it. Now we have left the triangle, and retesting the triangle must be allowed. And it is the 61. So is it true that we're creating B points along here that we're going to have to test in the future? Does it matter where from, or does it mean that at any moment that we try to drag our stops above that level, they're at risk to whatever retracement does come off of any of these movements above this level? And I'm like, well, remember what happened to all the triangles that didn't retest in the morning? Well, they made nice, juicy moves. Some of them even doubled the triangle. But you want to know what happened after? Is they all came back to the tips that they didn't test. Even the ones that were going down came up to the tips. Hey, let me show you. So when we first made triangles, like this triangle here, um, like you could say that that was in a triangle right there. And it didn't do a good job at retesting, but look like how aggressive it was, like boom, right back to the tip, and then it made an attempt at another triangle. I think a larger one. And came back to the tip. I mean, I guess it did retest it, but let me look here. Oh, this one. This is the one I was looking for. Where we made a triangle like that. Notice how it did not retest, and then it was like snipe hit the tip. I was like, yep, that's the way the cookie crumbles right there. And I'm like, here we go again. What's up with this triangle? It's clearly a triangle. I mean, I feel like 80% of the entire populace that draws trend lines will have the triangle. So it's like, well, that considers this time frame as well. And I'm like, well, is it not true that we have that kind of environment? Like, if I control Z enough, will we not find this shape? Let's try it. Maybe. Oh, there it is. That's the shape. So I can drag this over, and we're doing that. You go back in the video, you can also find that. So now if I control Y, will it? No, it doesn't give me anything. These levels are still untested. Do not drag yourselves above those levels if you want your position still. So we must be careful about that. Also, short hedges will target that level. But I would much rather target the white dashed line from above. Yes, this will make it hit and such, but it's nowhere near as attractive as any move that we get on top of the white dash line. And a hedge from the blue bar above, that's juicy. I do like that. Like if we could get up to this green zone here, and then actually grind it and get up into the other side of the range, somehow get through this level with enough time to get to the other side of the range. Because, you know, this level used to be a range, right? Like it used to use this area as green zone, red zone. Just to be clear, I want to make sure that that's clear. And like, I don't really care how we get there, but getting through this zone could be like, oh, we're gonna smash it once and then come off of it, and then we're gonna go back to it again, then we grind it. And I mean, like that's how we've done so many of these ranges. It's like, look at this one. Like we smash it with like, oh yes, this is clearly here. Everybody can see how good of a resistance this is because it exists. It's a barrier, and we've acknowledged it. And it came down off of it. And then we come back to it again, minor acknowledgement. Sometimes a consolidation is the form of the minor acknowledgement. But what we did is put a little bit of a node there. And then we busted up on top of it just to come back and stand on that. No? Because that was the consolidation that we did underneath the green zone. And when we came back from the red zone, we had something to stand on. And that's why we like to consolidate there typically. And it will change in the future. It'll be on us to adapt to it effectively. But that is the way that it is right now. Now, of course, everybody that traded this back to the tip of the triangle, you know, they're experiencing the same thing that we got the last time. Of course, all these targets that I put in there were hit, and we're back at the POC yet again, just to make them into a loser another time, right? Everybody that traded right in the middle gets another slap on the wrist because the market just came back and made them into break even yet again. So I'm like, we want to develop kind of a disgust from entering around that area, but it's fine for taking profit. Fine for taking, you can sell them their positions, but you don't want to buy in that area. Like somebody almost guaranteed will give you some liquidity in there because they just love trading there, right? You know, that's the idea. You know, like you can trade back towards that middle area, but you don't want to trade from the middle area. It doesn't give you as much as trading from the extreme. Now, yeah, sure, it might not give you as many opportunities to trade from the extreme because it's not there as frequently, but you just have to understand some things are worth more than others and they might not be as frequent as the thing that is invaluable. You find this is a law in nature as well and in life. You know, if the valuable things were easy to get really quickly and without effort, more people would have them. More people would have more gold. I think, you know, like spawn some gold then. Why not? Right? if it's so easy, get some. Or whatever else, some money, whatever. But at the end of the day, it's like you can find a lot of stone and like useless sand and dirt and everything everywhere, but that's no good. Be nice if the juicy extremes were more frequent, but they're like nuggets of gold. And you get plenty of dirt, but we get to choose what we settle for. I have a saying, and it's kind of hard to say, but I do believe it. And just because the market's dishing out crap and everyone's eating it doesn't mean you should too. And it's true. Um, that's the way I look at it. And if it's serving crap for 80% of the day and only 20% of the day is attractive, nice, proper movements, well, we can choose whether or not we're attracted to those movements or the ones that are inside of the zone that is only giving people crap all day long. Interesting, interesting, interesting. The white dash line can actually increase volatility on the break. I just can't help but notice that it's because of the response of the white dash line that we got what we did before. Is it not true that we ran into it? Now we've come back to it in a slower approach, and now the response that we've had off of its general presence is nearly half the size of what we did originally. Maybe not even. It's like tiny, right? So I'm like, well, now it's the case that when we run into that line, it's very unlikely that we get the same kind of response, but less. And where did we get that before? We got that before on levels that we broke down and conquered, made into support levels. Levels that we would run into with a lot of force like this one, and then spend a lot of time chopping only to make it into a step that we have in the past. Now stepped on top of with absolute precision. And, they've made it clear that they own that level now. Like, it's very intriguing to me. They own it. Like I said before, I was like, it's the name of the game for the long traders to end up owning this level. I can't remember exactly what I said, but it was about the institutions owning this level, and they want it, and they're going to end up owning it, and they'll do whatever they can to get it, and they own it. Now the long traders don't have to worry about buying this level, and that's a fact, right? Those 1,000 people that were in the way now are not in the way anymore. And the and just like I was saying, the 3,000 that wants to be sold off up here, they're able to do it now. They can do that fine, safe, easy. And it looks like they did too. Like, what is this movement right here? Do we find that it's likely that after a prolonged sideways movement where it's unlikely that many people have found much value, that all of a sudden at 1305 everyone just shows up for a movement of exact precision? And they all calculate it down to a T where it reverses with exact precision, meeting the equilibrium of this entire area as an S wave, and their awareness of that is on par, right? I find it hard to believe. But the white dash line is something that everything has been bought back up to again, almost. Matter of time. And it's kind of like resisting the grain to do what it's doing right now. Like I would say, like things would typically be feeling a little bit of resistance, but as much as it looks like it is, it's a process of getting through it from what I can see. And I'm like, all right, well, let's look at this level again, for instance. Is it not true that it's kind of like a smaller version of what we've done here, where we've run into it really hard once, and then we've come back and started chopping at it? Well, like, what did it do here? Did it not run at it really hard once and then come back and start chopping at it? Very interesting that that is the case, that it did decide to make that spike first, run at it again, and make that chop. where when we look at these two things separately, they both have all of the same characteristics from the spike and the chop, and even, returning back to the high and all that jazz. So I find that intriguing. Find it very likely that, you know, it's like a spike and spring, and it's not a pattern that typically would end up making things continue, but making things reverse. However, it is subject to failing. The elephant in the room is not anymore this line that's already been broken, but the one that hasn't. And in the event that we break that line, we will get to see exactly how much power it has against the trend. Is it one that's capable of changing things drastically? Well, I'll tell you one thing. We haven't even doubled the triangle yet. Something that we may be interested in doing before we're interested in breaking that line. Many of the people interested in breaking that line will suffer by the time we've hit the extreme of that triangle, because a lot of people will have tried to be in for the break. But by the time we get to the extreme, it may not actually be even any higher. It's true that it could go like this and still get to the extreme. And I'm like, all right, well, centralizing inside of a crappy little triangle on the short term, it's hard to argue that it's not doing that, right? So, best thing about that is to understand that it's coming to an end and it's likely to change things. Is is that like the way that we make a fourth wave? Like, did we do this roughly again? Like, I'm like, is that there? Did we try that again? And I mean, is that not how we make 5-wave moves usually? Like, we do two corrective waves, they're supposed to be similar. I know it's not exactly similar. And I know both of them have this dodgy little spike out of the bottom. But wait, doesn't that make them similar? It's interesting. I'm not exactly 100% on that one, but it is very, very intriguing. The two consolidations are separated by two upwards moves that are similar size. This one and this one. And between them, they have a distance, like it's consolidated by this much, but it also has a little bit of a spike. And I'm like, what that's doing that? Like, literally, like, could it be done now? I'm like, well, technically, yeah, it should be done now. Let's see if it finishes. Is it the work of the public that is acknowledging this? I'm like, no way, no way, no way. There's no way they're aware of this. And I find it likely that change could be right around the corner because of that, as strange as it may seem. And I'm like, well, has this even happened before? Like, maybe we've been doing this strange flag-like maneuver ever since, we started. And we've been, like, trying to use it, maybe. Not in exactly the same fashion, but similar. Or maybe I'm crazy, It's, at the end of the day, something that I wouldn't obstruct it from happening. I could say that it is definitely getting messier. But it's not like it's not working, though. And it is the method of advancement. At the end of the day, we are coming up to the change of the hour. And it's a controversial hour as well, with it being one that increases volatility. We've been known to increase the average candlestick size. Right now, it's not incredibly high. The movements that we have right now, every single candle that we have is roughly around 5 points on the 1-minute chart on average. Basically, to consider more than 5 points in a candle is to consider more than average, what we usually can expect. And I would expect the average candle size to jump to like something like 7 or 8 off of the mere change of the hour. I tell you, the elephant in in the room right now is definitely going to be that support line. But I tell you one thing, it's not like we've been champs at breaking supports today. I tell you, it's been very crappy. Like think about this one here. I want to I want to emphasize that line somehow because it has probably been the worst trend break of the year, not gonna lie. Like just look at it, for instance. How many times have we broken the trend? Can anybody tell me right now before like I know nobody can count that quickly. How many times we've freaking broken that trend because it's like a dozen more? I don't know. You don't have to count. But I'm just saying, it's so many times. Does every one of these times count? You know, you could count them all. But even if you don't count every one of those times, and that's just once, and that's second, that's third, that's fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th time we've tried to break this trend, and it hasn't done it. Where did that come from? Because that's not an environment that we've seen at the beginning of this year. Literally, if it's going to hold a trend and get somewhere, it's not going to do it this way. This is a cheeky way to do it, really. Because it's like, hey, everybody, try and short it. You're gonna get something off of this. Look, you're missing it. It's breaking. And then finally, they try to chase it, and they end up being part of the advancement. Every single time anybody's ever tried to short this because of the allure of being in for the break, it's only ever given them trouble. It doesn't mean it's not gonna break, like I said before, but what could cause the break that's going to be different than every other break? Well, I'll tell you one thing. The change that we can see at the end of this trend might be different than the changes we've seen that have led to every fake break in the trend so far. One thing that we saw that was very, very clear on this one was the fact that it liked to make that spike out of both sides. It went through an effort to try and make things even. And it'd be quite extraordinary in the event that we managed to do that again. It's true that we are coming up to a range. This is the old all-time high. One of them. Not the current all-time high or nothing. But at one point this was the all-time high for so long. Like for a prolonged period of time. Like, excuse this chart for a second, but you see that line right there? That's the old all-time high. Okay? That's the it goes back so long. So yeah. Interesting that we're here. Just realized the music turned off. But that's fine. Oh, whoops. The cool. So the progress through the white dash line, of course. Now we're through the white dashed line, of course. Allowing it to test from above is very, very important. Of course, you wouldn't want to drag your stop this close ever, anywhere. Like, you drag it into the spread, you're going to lose your position. So it doesn't matter if it makes a little bit of a spike beyond it. I don't care if we hit that green zone up there. If you've got a position from below this range down below, it's worth nurturing and keeping safe. And dragging it above this level is like it's very dangerous, right? And what are the odds we don't touch the purple and yellow line? Like, how many times have we touched that line again? I remember we talked about how many times we spike through it. How many times have we touched that line? Like, how many times has it been the baseline? So, like, God forbid we prevent that from happening. That'll certainly cost us, you could say, right? So we don't do that. And after all, it's not very hard to do, but it's like a small thing, and I'm like, ah man, I wouldn't want that to be the small thing that costs you your position. That's why I stress it with such emphasis, right? At the end of the day, I keep a very neutral mindset across everything, a very serious approach to everything, and that's the best way to go about it, in my opinion. Because you can always at least in my opinion, when you're presented with a lot of emotion you don't want to have to deal with, getting serious about things can become a more powerful force than and when you're serious about things, what can you do? You look at the information that at the data that you have to be able to come up with a conclusion about what you should do, about how you can change your actions to change your situation. And that's pretty much the only way to do it. And I'm like, or you can sit there feeling emotions. And I mean, like, a lot of people go that route. And I mean, like, it's like, it's very good to have a step-by-step process of how to get out of that feeling, that you don't have any control or whatnot, or that you're not going to be able to change the situation. And it's very much the case that you can. A lot of the things that you have to do in trading are going to involve one form of difficulty or the other. Like, many times it will involve patience. A lot of other times it can involve the discipline to stick to a plan that you may have never stuck to before. But because it's the plan that needs to be that needs to be in play for a prolonged period of time, and you can see that there is incredible logic into maintaining that plan and to staying with it, well, then it becomes the job to manage that position to the end. And if you can make money off of any decline along the way, well, there's no better way to do it. I can't put it in any other better way, really, if you think about it. I've been explaining these things every single day in different ways for a prolonged period of time, so I try to make sure that I can explain them in a way that suits every individual, and it means explaining it differently. And I understand that, because I wasn't easy to teach in school, I'll tell you that right now. I didn't want to learn half the stuff, though, but that's different.
Half the stuff was crap anyways.
Yeah, it's true, it's true.
I mean, let's face it, right? Unless you went to school to be a teacher.
Mm-hmm. It's true. So we are about to get the change to the hour. And like, I think the one thing that keeps everybody through a lot of these environments is having something to understand, something to think about, something to, keep the mind fresh. So when things start moving again, I'm ready, like it's serious. Like when we see that we've subtly broken down the white dash line, that we can see we originally smacked with full force, creating one of the biggest moves against the trend that we've had all day. Now we suddenly just creep up to it like that, break it, step on top of it, and do an S wave around it, like it's something that wanted to get a response. Like, we've shown us that now it's a support and a resistance level. We've done that many other times on many other levels that were important in the past, in different sizes and shapes and such. But it's true that we did return back to the purple and yellow line, and I mean, like, that's going to be the way for every move we ever do on top of that line, I think. Ironically, it's very steep and hard to maintain. Much progress would have to be had on top of it for us to really get out of the picture of that line. And I mean, like, it's just a matter of time before it comes back to it. So I'm like, okay, it's not an incredible issue to let it come back to that line right now. So we'll wait until it is an issue, and maybe we can make it into an opportunity. Because at the end of the day, if it spikes up to that green zone up top and hits those blue lines up here, we could get a hedge trade back down to that level, you know? And if you've hedged other trades back to that level, that's absolutely fine. But hedging isn't a necessity, it's a luxury for those that understand how to do it. And it comes with, they've earned how to do it because they had to put in the work of learning what it's all about, and then you have to take extra effort on top of a position you've already gotten exposure to managing a second position in the opposite direction, monitoring long term and short term at the same time, long and short at the same time. And effectively, one position could be larger than the other, but one position is destined for short term profit, the other for a long term profit. Another way I could explain that in terms the average stock trader would understand is like, for instance, if you got two companies that move very, very similarly, like let's say you've got one of those days where Apple's calling the shots on the market, and you've got QQQ, which is the index that Apple is calling the shots on. Or yeah, and effectively the name of the game is you can see that for every move QQQ makes the market, Apple's also making that move. And if you've got exposure on QQQ long, and effectively you've been holding it up, and you can see that Apple's also making the same movement, and there's a problem that's about to happen, and you can see that there's going to be a retracement back to this point right here, and you can say, all right, well, I'm going to take Apple short for this dip right to here while you're holding your QQQ still. So you profit off of this movement while you're waiting for this to continue higher. It means that you don't give this up to try and buy it back here, accepting a crappier price that's higher and easier to knock out in the future. But you keep the entirety of the position from the bottom, from the best price, right? And you focus on the pullback as something that you can take advantage of on another security entirely, while you keep your full size position. This can be great because in other opportunities where most people are like, oh, I'm long and it's obviously going to cause a problem that might take profit back, what do? Sell? Well, then you end up with not having exposure to any further gains, and you haven't held the accountability. It's essentially not as good of a position to be in. But it's the way everyone starts. And in order to develop the ability to hedge, I think it's safe to say that you want to build up a cushion. Like you want to be able to have that wiggle room to be able to work with two positions. And what's ironic about that too is when you start with one position, and it's going in one direction. It could be long, or it could start with a short position. But after all, you're starting with one position. And the name of the game is once you've gotten a decent profit on that position and it becomes a risk to hold it, you may be interested in hedging. Because it's another option to selling. You don't have to sell. You don't have to reduce your exposure. Because let's say, for instance, if you're in that long trade, yeah, there might be a risk that it's going here, but your target is all the way up here. Well, should you sell your position because of a stupid little dip right there? No. You could take advantage of it though. And it's like, is it a necessity that you take advantage of it? No, the necessity is that you hold to the target, regardless of the little bit of a problem that there should be there. You know, that's the name of the game. But if you can identify an easy to catch target or an easy to catch move along the way, that's huge. Now remember what I said about those blue lines, ladies and gentlemen. That's formulating. I told you guys about a 5-wave move that wouldn't stop the 5th wave as well, right? So like, if we look at how that formulated here, 1, 2, 3, 4, 5, it only came back to the 4th wave. And then we started 1, 2, 3, 4, 5 again. And that's it. And you know, you might have called it funny from before or whatever, but it's true that this spike, it did happen again, and it did happen again here, and again here. And, you know, we can see it's full of that. What are the odds? You know? Well, I tell you one thing. In the event that you ever prevent it from being able to pull back this amount, it could cost you your position, right? And now I'm like, what? It's even crappier at being able to pull back. Now it's like, hey, we started this trend and it was like, we can pull back a lot. We pull back a lot. We pull back a lot. And now look at it. It's like, not so much. It's like barely anything. And now it's like, oh, now you're so good at going up. You can go up farther than we ever have on any other one of the advancements. Well, maybe not. Maybe not actually. It does seem to go up this much quite regularly when it does go up. Yeah, it does. And I'm like, that's cool. It did that. And now, well, seeing as it's moved up as much as it typically does move up, could it have problems? Maybe some, but not much. Maybe what problems could it have? Well, the problems that it typically does, these pullbacks, at the minimum, it likes to make that one. And I can see we are looking at some other barrier here. This used to be a neutral level, like a gap, or like something that it's not part of a range, but it is a barrier. Something that undeniably was a force that it responded to today. And was it not a resistance? And now we're on top of it? Stepping on top of it, perhaps? The blue line did provide a little bit of a decline, but how much? For how much more? I think that green zone above will be on the table at some point here. The blue line again provides for another opportunity, but
It might
only
hit like a 188 right now from that B point at 1103.
oh, way over there. Eh?
No, 1103.
Mm-hmm.
Which is, no, yeah, I guess.
It is kind of way over there.
On your screen, yeah.
Interesting. I like the 261 though. That's just above my red zone. Oh man, it loves that blue zone. If it wants to go and snipe the blue zone again, like these ranges that have been roughly that distance apart have been absolutely incredible. Like these 13-point ranges has been insane. Like coming up overnight to hit it like that, I'm like, where did that come from? and now we're reaching for it again like that. It's insane. And we did that in the middle of the night too, where like the entire movement was like to reach back for that. And I'm like, wow, really, that entire movement all the way back to that level? And like it started by like, oh yeah, it's not even capable of getting back to that level. Like it was very, 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 very tough on everyone that wanted that level. But if you stuck with it, it allowed for a nice pullback uh, right to the point and beyond where it began. And then just to literally come all the way back like that is huge. So I mean, like that's where that line comes from, and how it formulated. There was a line before that was very similar to that, and we were going down, and this is how we used this line. Hold on. So at the beginning it was like that, right? And it chopped, and it was really good at staying inside of the range. It was really good at going back and forth. And then it popped outside of it, and it seemed like it was like, oh yeah, really, really far from it, you know? Like very unlikely that it was going to come back to it again like that. And then look at it just go all the way back down to test like that. And then at least would you think that it would make the stretch to get all the way back down to that line like that. But notice that there's no level that obstructs it more. And then we come back from the underside with absolute precision. What is that? Like incredible precision off of a level like that days after its inception when it started. The work of the public. I'm like, no way. Are they even awake at 3:23 in the morning? What are the stocks and options traders that you see on the internet? Are they all awake at that time? No, 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 no. Somebody else decides this line should work with absolute precision. And they call the shots during the day and at the end of the day. When the big moves happen, they consider this level. And I mean, like, it can't be because of everybody considering that level that it does this. Because find me one other person that has it, you know, in the world, and then I'll even believe it. But I just won't believe it. Look at how precise it was using here. You can see on the very, very, very beginning, it's like a show of force. Like they're like, this is our analysis. This is how precise we make the moves, and they dump it from one side, and look at how precise. Test the other side of the range. And I'm like, wow, incredible. And then you can see on the heavy volatility when they're like, yeah, we're moving the market. It's our domain. This is the heavy volatility. And we make the high of it the range. And then we come up and we step on top of it like we conquer it. Like we conquer it. Step on top of it. And we're done with it. We show we're done with it. And we move beyond it. Never to see it again. Now we have this one. We're in the business of understanding these lines. 100%. And how we can actually get up to them and stretch up to them and use them. And I'll be damned if we ever obstruct them from being used, because we can see there's hell to pay, right? It's absolutely incredible how much it will go out of its way to test these ridiculous lines. Now, I'll tell you one thing. This range right here that we've been using really well, does it not give you deja vu? Like this area right here, this top blue line right here? That top blue line will be seen again. There's under no circumstances will we not see that top blue line again. Notice that it's getting easier to move as we get through every obstruction that there is on the chart. All of the obstructions are gone. Look, clear skies from here. Got a red dash line in there. That's the first thing it's felt since it's moved above the green zone. It'll make it through to hit the blue most likely, but that blue and white line is certainly calling for a retest. Doesn't matter how it's going to get to it or when, but it will. There's the break of the red in order to get into the blue. Absolutely amazing. We're at the 261 now. Notice this level right here. Incredible. Absolutely incredible movement, ladies and gentlemen. The blue and white line needs a test. Beware. It's an appropriate level to ask for it to come from the red zone to the green zone, you could say as well. After all, when we were in here before, what did it look like? Let's take a look real quick. Wow, it initiated the dump from that point. It kind of like stumbled on it. It acknowledged that level. This isn't even when it first was made either. We've used this level before. Here. Yeah, it doesn't go that far back on that 1 minute. That's okay. Just beware of that white dash line. White and blue one. You can see that its interest in pulling back to it's relatively high. We've come from the 261 down to the 227. Everything past the red dash line's been made into wicks and spikes so far. We know that even if we grind sideways for about 15 minutes, we'll run into the blue and white line, so it's subject to how much time it takes to get there. You know, however much of a move it's going to be. And all of this move past the white dash line can be taken back to it. Beware. That's something that we might have to deal with. This white dash line. The old all-time high. Stepping on top of that level. Was it not true that that level was kind of like a... It's kind of tough to get through. And I'm like, well, look at these two pullbacks that we made. Is it not true that the 5-wave move, 1, 2, 3, 4, 5, and then it ripped up? Was I not just talking about that? It's interesting. It did it. It's like it was listening. Literally. But a good solid explanation of the blue line right before it got to it was amazing. Okay, so I'm gonna take this. You know, we saw that that doubled, eh? We saw that that doubled, and it was way more than doubled. It's tripled now. You know, we talked about that when it was down there, but that wasn't one of the major things. I'm looking for things I can try and take off. I fear that it's too cluttery for the moment. It's like everything else I'm going to use. We're gonna have to work with it. So
Yeah, it's good though. I mean, you know, your blue zone was up there, and 261, very close to that. And red zone.
yeah, when the blue and white line hits below, it doesn't actually have to be too much lower. I'm like right now, if it made the spike that it has on the top out of the bottom, which is ironically the same size as the consolidation, it would hit. But it's like yeah, that brutal sideways, you know. I'm like, I tell you one thing, we go sideways here for about what, 15 minutes was it? We will hit that level. And it doesn't matter if it chooses that as the path, because that's what it does. I mean, it doesn't always have to come down to the rising wedge blue lines. Like when you get this movement and it pops out of the top, it does not have to always come down to the top. Do you know that it could pop out of the top and it could grind sideways and get it? And that's like a cheeky move of being able to do that. But if it's really steep like that, and or let's say it's like this, and you know this line continues, right? And if we're going and we pop up like that, we could go like this, and run into that line, and then that can be the point that we change things. Like, think about this, for instance. You know how this works right here? We do this. You know, the whole thing, right? And let me think. Okay, yeah. Here. Okay, I don't know why I posted it all the way up here, but that's okay. We will work with it. No. So that right there, right? And we remember this. It's like at this point in here, it was making a rising wedge right there, right? That like that, eh? And it blew through the top. And it got back to it here. And then dumped. Won't find that on Google. Won't find that on the internet, ladies and gentlemen. Find that here only. So, kind of interesting. Mm-hmm. Well, they're repetitive 1930s strategies that haven't been updated by people that have long passed that would have updated their work given the chance to be alive this day. I guarantee you it. Yet everybody's just kind of using the same pool of information over and over again. Makes them very predictable and herd-like to the people with all the money. So, very predictable. You can assume that people run into the same information on the internet. And like I was saying yesterday, it's like that's if they make it past the banks, if they make it past CNBC, if they make it past the mutual fund managers, if they make it past the bank managers that just want to invest for them. You know, if they get through that and they finally have an account for themselves and they get to make decision for themselves, that means that they've pushed all of those other people aside that want to do it for them. I mean, like, most of the people don't get to that. Most of them get locked in with those people, ironically, which is tough. And they talk a lot about it being safe, you know, to go with the bank. Like, don't know anything, just do the easy way. It'll take your whole lifetime, and you'll end up with something maybe. And I'm like, well, it's interesting that they never suggest the take control, have accountability for your actions, understand what you're doing, study what you know, learn every day, advance on what you know, become better, and change your strategies accordingly with the market. And, you know, if it involves getting your hands dirty with doing a little bit of work and putting some time and effort into it, and patience and discipline, well, that's what it takes. I mean, it certainly pays for it.
John, do you remember when I was using the Yoanda?
Mm-hmm.
Well, it just retested like a giant trend from a while back.
Mm-hmm.
And it's got that old. Do you remember that green and red zone that I had? Well, it's just maintained some of that red zone now as well. So that's pretty interesting as well.
Interesting. Yeah, I have like a ton of short-term analysis on Oenda at the bottom, but I stopped using it because it was different. Yeah, everything I did on Oenda is all the way down here. It's insane. Given the opportunity to ever trade around 10,000 again, 12,000, it'll become useful. That's the hourly. Obviously, this chart's not meant to be looked at on the long term, but the fibs, they've started to like gravely annoy me to the point where I just like to mark the one that I'm interested in, and that's that. Like right now, one thing that I do understand with this environment is the yeah, like those, they're done. I'm not using them. 1, 2, 3, 4, and 5. Find it interesting that in the middle of those two gyrations we have an S wave, and on the bottom we have something that makes a baseline out of this movement. So like we've produced this on the other side as well. Very intriguing. The symmetry is on par. Like it's true that this happened exactly in reverse. Kind of strange. Both of those pullbacks are the same size, and then the advancements a little bit different, but give or take how much? This much? And I'm like, okay, if that's the amount that's different, we can look at that and actually find that that's actually something that matters a lot more than you would think. Name of the game is to keep. What's up?
I was just gonna say I might share my screen real quick because I can't take a screenshot of something from that long ago.
Okay, okay, yeah, let's take a look.
You see, yeah?
Oh yeah, let's take a look.
Okay. Yeah.
We're in top of this red zone now. I put that there a while back now, but we just retested that trend, and that was from God knows how long ago. Yeah, there we go. Yeah, it's a big old retest. Looks like. Looks like a little retest back then, but it came back to it as well.
Hmm. Interesting.
Yeah, it's a good one, that one. Pretty good, pretty good.
Yeah, it's pretty like on point. Like sniped it. I like that.
This is the Awanda as well, though.
Mhm.
Let's have a look. I might have to try and have a look, see where it lines up on.
You know what I noticed about that range that you have there too is the fact that we spiked on the top and the bottom of it.
Yeah, yeah, yeah. I just realised that. Yeah, I haven't been looking at this chart, but it's nice to look at it right now. Yeah. That was the previous all-time high as well on the on this one as well. That's crazy.
Yeah. Okay. Yeah, I have the same kind of marking there. Yeah.
I do like this range though, and I thought I was going to come back to test it at some point to use it again.
Mhm.
Yeah. Anyway, it's good though.
Yeah. Yeah. Nice job. Yeah, it makes me want to put some fibs on this level right here. Just to take a look at where we're at with things here. So the 161, you know what's funny about that 161 is lately, you know, it's true that we've been coming back off of the 161s, and when we do, we can come up to the 188 200s and actually not need to play back out to that B point. Like I wonder whether or not we're doing the exact same movement that we did when we didn't get to the B point earlier. It's like very similar to be honest. Uh, Not quite the same. Hmm. Yeah, that's that. And from the moment that we talked about this blue and white line and its gyration down to this point right here at the low of that node, it has been this sideways movement that it has chosen to get to the blue and white line. And in the event that we can see that it responding to the blue and white line changes the way that it decides to move, that wouldn't surprise me. Getting underneath it is going to be something we will have to deal with. And it doesn't necessarily mean that we have to stay under it for long, but it's very likely that we do. We're going to manage to get underneath this line at some point. Because it is the case now that in order to stay in this lovely consolidation that we have that seems to be growing this node here, it will have to exert exactly the amount of energy required to maintain this trend in order to stay above it, which means that we will have to knock down every single barrier in its path in order to stay on top of this level in perpetuity so that it stays the support line. I'm like, good luck with that. It's not going to happen. But in the event that we try to make one more lunge on it or two more lunges on it, any more pushes that we get on top of this line end up back at it. So I'm like, okay, when we did that before, every single time that we pushed away off of it, we could end up back at it, but it was from a particular distance. You know, we would at least make an effort at it being like this much. And I mean, like, could we test this line again at that time? It seems like it might be a little bit crazy, but it's something I'm interested in, ironically. I mean, like, why did it pick this point right here just before it started the heavy volatility? Don't you find it suspiciously particular that it all started off of two gyrations that happened at those times right there? And those times right there was something that began the line. And at that time, could you say that it was put to the test and it ended maybe for a moment? And it was something that kind of put everything that it was doing to the test and maybe could have ended it. If not, it did end it for that moment. So I'm like, all right, well, now we have similar times effectively presenting themselves. And it reminds me of the day that we did this. Many people were not around for it, but I'll share it anyways. This one, where every single point was meeting the next point. Like I took this initial one and I doubled it and doubled it and doubled it and doubled it, and it ran into every single point. A mathematical phenomenon where every single portion that was even on the bottom was even on the top all the way through until this point right here where I expected it not to be interested in it and instead move through the blue bar above, and it did exactly that. So this is just 2 posts down. And I mean, I would never like make it go sideways to the blue and white line, but it undeniably is the method that it chose. And patience is key with environments like this. If you know that it's going to do something like that, many people try to short it. Many people see the B points down below. They see everything happening down below. They don't even care. They just short it. Now they've been, they're all subject to being stopped out. Because everybody that's shorted in here, you can see all that red up there like that. All those people, where are they going to put their stops? In the blue bar? At the area in the red zone? The area that obviously the hedge funds don't want to buy in. They're cringing. They're like, oh my god, I don't want to buy into this area. I'd rather the people put stops in there, and then we just move it a little bit into their stops, and their stops move it through that area. Because we're in that situation again where that 1,000 people may be short in this area. Where are they going to put their stops? Well, up here with their 1,000 take profit order down here. And we know the institutions that are clearly long have found obstruction at this level. So how do we treat the people that are obstructing us? Can we essentially annihilate them and move the positions through the levels that are otherwise obstructing us like we have all day long? I wouldn't be surprised. I wouldn't be surprised, to be honest. Contrary to popular belief. I do think that no matter what comes of this area, it used to be right in the middle of this range. This point that we're at right now was effectively right in the middle of this area. And I can see that so far, all they've allowed people to do is experience the one side of the range, the red side of the range, which is interesting. Because as we've come back to ranges earlier in the day, we showed that the red zones could be used as supports and the green zones can be used as resistance. And it wasn't the only time that we saw that. Like, oh, here. The red zone was used more as a support and the green zone was used more as a resistance. That's totally backwards. That's complete backwards. Like it shouldn't be done like that, right? So, when the range first started, it wasn't like that. When the range first started, the green zone was support and the red zone was resistance. Now, it's funny to see us come back to a range so far away and actually use it properly. We can see this is the moment that the red yellow line was tested and it was off of sideways movement. Ladies and gentlemen, it changed things the moment that we tested that line. Like it cared about it. Watch it test from the underside now. A new trend contrary to popular belief, more important than any other one on the screen, and it's the one that's the smallest. Coming from the top, many of the long-term traders trying to analyze this trend have no idea that short-term trends actually matter. And in this case, this one is the one that's holding us back from advancement. And it's been somebody's job today to advance this, and they've done a good job. They responded to everything in a good way, and I don't think it's a matter of the public that have done this. They're not aware of these levels as I don't think many of them were there every single day. And this level comes from multiple days ago. Would have been contingent on that everybody that's here today would have been analyzing that day. It's just another thing against the public. Most of the public doesn't trade every day. So I'm like, well, how do they get the analysis that works every single day? And where is their time for random nature? Do they get to be part of the random nature only when it's inside of the consolidations? Because anytime it seems to be moving somewhere, it's with absolute conviction and absolute precision. I love that. It is true that there is an untested B point, but we have a green zone preventing it from happening. This is a chance for it to show us how much it matters. Now, instead of it being interested in this B point down here, wouldn't it be something for it to be interested in this one instead? The small, decrepit one that basically doesn't offer anything more than like 5 points or something. It's like, why would it choose that one over the one that would make people more money? But I say the one up top gets hit before. This one, the one that everybody wants to get hit because it makes them more money, they'll have to wait for. That's the irony of it. But people will be put in their place, and like I said, the red-yellow line is more important than any other line on this chart right now. And it's ironic because people don't believe it, but market doesn't move for people. It moves for the people that understand, and they're the few. And we can see so far everything's working as it should. The green zone did give a chance to show how it was responded, and I don't think we're going to just see one response off of it, but many. After all, it is true that whatever spike we made into that red zone has been replicated out of the bottom of the node in order to hit the green zone. It's like we've had our average counter trend move. Remember this move from earlier in the day, all the way from before here. Like, we were using this, maybe not this one, it was a little bit bigger. Still, the bulk of the consolidations, don't you find it strange that, yeah, sure, this range might have been bigger, but look at what the volume had to say about it. The volume had to say that the bulk of everybody's trading was contained within what size of range? This one. And everything outside of it was undeniably BS. And it moved back quickly. You know, like look at everything that we did outside of that area. You know, all of this moved back as quickly as it left it. You know, they were all wicks and spikes, even this one. You know, even this one. Even this one. All of them. Until it was done, everything came back to that medium point. And you could have said that it started here, and that even this move was one of the first spikes to initiate the relationship with that level. And everything that we did like ended at that level and began at it for a prolonged period of time. And what's funny is that's where the most people traded, and it was the worst price out of all that environment. It's like, what happened to catching the low down here? What happened to catching the high up here? They offered the best movements, right? And anybody that trades from here is never going to be able to get this kind of movement. They will never be able to get that, which is funny because they're not even going for that. So the red yellow line broke. At the end of the day, that's the line that should have broken, and it's the line that brought us up to the 61% retracement of this movement here. We can see it's just about hit it. It didn't, I don't think it hit it all the way, did it? No.
Put a picture in the exclusive call there, John.
Let's take a look.
Thinking like, obviously you have the red zone and green zone there with the consolidations as well, so even sizes, I think. For winner.
I do like that. I do like that. That's looking good.
Yeah, so possibly a move up, but
It's like a fourth, like you've got like a 5-wave move going on there, where you've got these two pullbacks being similar, but they're separated by a really large middle move, and that's the way it should be. Like the 5-wave move is supposed to look like this, this move right here. You know, we've seen it be this move so many times. It's not supposed to be though. Like if you read the textbooks, the guy's like, the third wave should be the biggest. And I mean, lately we've seen this: one move up, one move up, and one move up, and they're separated by your standard, you know, pullback. And they can be similar, sure, but it's still a 5-wave move. And I mean, yeah, it still probably will work, but it's not textbook. I mean, I could show you some really weird ones working, you know, like they don't have to look pretty at all. They can be really weird looking and end up being really effective. Like I can like now that I say that, I'm even looking at this one here and I'm like, this went down once. And if you look at the times that it's managed to go up, it went up once and then down again, up once and then down again. There are 5 moves there. Only 5. Like 1, 2, 3, 4, and 5. And it decided to make that the way that it does 5-wave moves. And I'm like, well, it's so strange that that's the case. And I mean, you know, it's actually quite symmetrical and everything. Like I love the idea that we make this this is the spike on the top. The spike on the top is the size of the middle, and it's the size of the spike on the bottom. And I mean, like, as messy and crappy as that looks, like, it's remarkably accurately equal. And and everything ends up right back at where it began. Like this point right here, it's terrible. Of course, we've been there many times. But the red yellow line did break, and I could see that that was a very strong necessity at the moment. You know what we do have here that I just noticed actually is a left shoulder, a head, and a right shoulder into a head and a right shoulder. This, ladies and gentlemen, is the classic inverse, or sorry, head and shoulders to inverse, where we have a regular head and shoulders, which undeniably worked out the way that it should have, where it broke the neckline and went down. And I mean, like when you look up a head and shoulders pattern, you'll find that this is how it's supposed to work. Now, it is true that that's, part of what happened here. When that ended, we formed the same pattern in reverse. And now we're here. Roughly. It's very, very small, so it's hard to see over top of these patterns, but effectively, I can see that that clearly was a head and shoulders to an inverse head and shoulders, an 8 sequence move. Like I said earlier in the day that we could get, not about this area or anything, but it's just in general something that we've been seeing a lot of lately. And like I explained before, when we get this movement, it crosses through the same point once, twice, 3, 4, 5, 6, 7, and it's supposed to do it one more time, but it didn't in this case. Like, let me draw it out here. One, two, three, four, five, six, 7, 8. Yeah, something is different about this one. Sometimes they forget to make like the. Sometimes this movement can be the same. I think it's very close in this case though. Now, like, I'm like, all right, what about, okay, does it matter about this area that crosses through the same point 8 times? We can just say that it's generally the consolidation part. And the part that we have out of the top is suspiciously the size of the consolidation, and the part of the bottom is too. Now, we can see that the last pattern to form in this is the inverse head and shoulders. So it's like the capacity of the head and shoulders has fully played out. It's taken the entire head that it had and put it out of the neckline, you know? And it's like, yeah, yeah, there you go. The best thing about it is when it's done, because I tell you, who wants to come back to this middle level more? Like, does anybody want there? Is there, would we say that any movement that we've done prior to that is better movement? Or when it's doing this, is it most effective? I'm like, no, 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 no. This is terrible. When it's moving properly, it can be generating at like many points in a matter of minutes. And I'm like, okay, sure. Those that had faith in the green zone were paid. And where were they paid to? The red. Because the value of the green zone is to bring it to the red. Now you want to know what's funny is there's absolutely nothing about today's movement that suggests that's a green zone or that that's a red zone. You would have had to have been working the day that they made this rage originally for you to understand it. So it's interesting. With that much precision, it decides to work just as it did originally. The same thing goes with the blue bar. Blue bar is not even from yesterday, it's like the day before, or maybe even before that. It doesn't truly matter. I just know that it exists and it is from a few days ago and it literally works really well. Under no circumstances has obstructing it from getting back to that blue bar been a good idea. It's always been the case that that blue bar has been the beginning and the end of any move that we've had since the beginning of that blue bar's existence. And the yellow and red line, I tell you, that worked out better than anyone could have thought, and I only thought that that would work because I could tell that nobody would think that it would work. It was directly the move that took most of the stops out too. Like I said before, most of the people that shorted in here, they're going to put their 1,000 stops right at the top. And think about it. If you're an institution and you know that this is the red zone that used to lead back to the green zone, you don't want to be caught buying up in the red zone. And if anybody does look at it as resistance as well, maybe they do pose a threat to your ability to advance your assets. What do? Well, the best thing you can do is have them stopped out. It's cruel, but it's true. What else would you want to do about it? How do you get them out of the way if you don't get them out of the way by stopping them out? You know, like think about it, because they have to think about it, and it only takes 2 seconds to really think about it. And I'm like, well, they're best out of the way, and somebody's business is to get them out of the way, and we can tell they just did. And if it's not through sideways movement, it's almost unbearable for the person that doesn't understand why it's necessary. Then the movement's against their stops. And if it happens 11 times in a row, they might try something different. You know, and that's a hint towards the 11 low zones or what it takes to reverse. But 11 times of trying the same thing over and over again, and it's not working, and it's not working, are you going to give up? 11 times is a lot, right? Most people would give up, you would say, right? Except the first person out of the 11 times is actually right. They just didn't hold. And so is the second and the third and the fourth, all the way to the 11th, because every single one of those lows ended up a profit to the person that decided to hold it. And that's the interesting part about those 11 low zones. Because if you have what it takes to make it through the 11 lows, well, you get to be in for the trend that ends those lows. The multi-low zone comes to an end always, or we'd be in the last one that didn't end. It's true. But all 3,000 of them last year and 5,000 of them the year before all came to an end in order to start this trend that we're on right now. Because it's not a multi-low zone here. Is this a multi-low zone? No way is it a multi-low zone. We're at the high of day of a huge run. There's no way it's a multi-low zone. I'll tell you that right now. I could argue that all day long. But under no circumstances would we ever consider that a low. It's not a low. But the fact of the matter is every single one of the lows in the past has had to end in order to get us to this high. And I love that fact. It makes me optimistic about any lows we have in the future. They too will end to get us to the next highs that we will have, and these highs will end to get us to the next lows that we'll have. Because who thinks we're never going to have an 11 low zone again? Well, I'll tell you one thing. It's going to involve this trend breaking. 100%. Because we can never get to any low again without having broken it. You know, we can't ever end the uptrend without breaking that line. And obviously, like, that's the case, right? But maybe it's not obvious. Like, I mean, we're not born with the information to understand that the trends will break. You know, people tell us trend is your friend. You're supposed to think it's your friend. And I tell you, the closer we get to that trend, the more likely it is that we break it. So I'm like, sure, right now we got plenty of space with that. How many patterns could we fit in here? Could we fit this entire consolidation inside of this area? Oh yeah, we could. So I mean, like, is it wise to assume that it's going to break now? Like, I'll tell you one thing. If it even ran all the way to that trend, it would nearly exert all of the energy that it has to break it in getting to it. So one of the best things that it can do is actually waste time in order to get to it. And that's the last thing people want to hear. I'm like, yeah, okay. So one of the best things that I want to see is us get on top of this blue bar, because who thinks we're not getting back to it? It offers juiciness. Every single time we get away from this bar, we're getting back to it. You want to know what the best juiciness would be? Is if we did this move on top of it. Who would like that? You know? Especially if it was running into something else at the same time that it was also running into that distance. That would be attractive. Now, I tell you one thing. This can happen at any given time. But until it happens, it's not attractive. I call it a contingency move because in order for us to find it attractive, it's contingent on it doing something extraordinary. Now, there's a good chance that it doesn't often do the extraordinary thing, and it won't give the opportunity, but in the event that it does, we can certainly find it attractive and go for it. Otherwise, these levels right here I don't see an instance of reality that they do not get hit. I know this one didn't get hit, but these ones, they're the high to a red zone. Was this one a high to a red zone? No, 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 no. But this one, remember what happened last time we went through a red zone? Like, how many times do we need to test that one? I mean, like, geez, like, not gonna test this one, are we? Okay, that's tough. I would strongly advise against assuming that it's not going to test. And I'm like, okay, fine. Let's say it only tests from the caliber that it moved before, and it has to move this much before it's interested in testing. Does that mean that any time that we move an advancement until we've met that distance, that it's at risk of testing if it hasn't? Oh yeah, that's the case. If we haven't tested the red bar by the time that we make that distance, it's still a risk. And I'm like, I find it 80% chance likelihood that we don't have to make that distance first before getting back to it. But all the power to it. You shouldn't sell the long trade. I never said to sell the long trade, only trade against it. And you'll soon find out why you shouldn't sell the long trade if you try to trade against it. Because it's hard, and every trade that you do take against it has amounted to you better have taken profit and kept a profitable stop, or else it's become a loss. And if you use less than half of your core, like if you're trading 1 NQ and you're using 5 MNQ, then that means that any time that you have taken a loss, if you've taken a loss, you've only just been making half on your NQ while you were losing on your short-term trade. So long as you didn't make the same mistake at the same level twice, then you're up on every trade. So it's a beautiful thing. At the end of the day, here we are at the end of the blue bar. The 200% retracement. And I mean, like, it is not given it. What's up?
I was gonna say, can you check out the exclusive call for a sec?
Yeah, yeah, what's going on?
Got,
Take a look.
well, I've got that red zone that you've got there pretty much, but this is the Oanda, like I said.
Mm-hmm.
I've got that gold zone up there as well.
Mm.
But these are all lining up with like the 261 as well. We've got pretty much 261s there. We're very close to them anyway. As well. So that red zone looks very interesting. On mine anyway. I'm not sure if it's the same with yours or not.
No, yeah, it is, it is, it is. I see that. Like, basically, because it does a ton of lines on there, right? And I'm like, oh man, it's just like killing me. So I'll turn it into a zone. And we know that the 261's at the bottom and this 261's at the top, and then we'll work with it. Sure, these levels here we could keep them on if need be, but I'm in the business of finding the reversals like the ones that we've been having off of the blue bar, and they're nothing to do with fibs. So I definitely I think the market is on a different agenda where there is no confluence when it runs into this blue bar. There is no confluence when it does stuff like that. Like it's literally that point right there. It's a mathematical phenomenon. And like I said, like I showed on all these other levels, like when we respond to these levels like that, that's no confluence, ladies and gentlemen. Like I know, yeah, sure, we're seeing like blue lines and everything, or sorry, green zones, but I'm like the amount of accuracy that goes into testing this from the underside and testing this from above, those are the kind of accuracies, that's the kind of in line with the market that I like to find comfort in. Like 100%. Like those absolute precision tests like that, I'm like, what the? That is insane. The amount of respect it has for that trend line. I'm like, I'm not gonna, I, I'm not gonna look for something else when I have that. I'm like, that is enough. That is way too much like accuracy to start considering other things. I'm like, it's like shaming it to consider other things almost. I'm like, no. I can see it happening again here where I'm like, why is it the case that we put so much love on the bottom and so much love on the top of these ranges? I mean, somebody must have them, and I bet you can't find 100 people that have them. So it's not the public, it's the people with all the money. That's the interesting part. The public has the fibs. That's the interesting part about that. The fibs haven't been working very well. Sometimes the 261s have been, but I'm like, which day are they going to work? This or the next. What has been working is the blue bars, and I can see that. Trading back to them like they're the mean. And it's like they have offered extreme moves, like extreme moves to get back to them. Like any movement that we've had to get back to this blue bar has been extreme. Like it's been contrary to the popular movement that we've had, like to the normal movement, contrary to the normal movement that we're used to seeing. Like this range right here, yeah, sure, it might have doubled and everything, but it wouldn't have done that 2 weeks ago. Wouldn't have been that interested in it. So I think like it is a new domain where things will change to like the things that we're used to are going to change. And I love that because I can tell that when I find out what the change is before everyone else does, that that's something that most people can't do, and I'm like, that is what I wake up for every single day. Anticipating the change, not having had it thrown in the face every single day so that I can then understand it, but to see the need for the change before it happens because you understand the necessities of the market and exactly what it needs to survive, essentially. And enough watching it will get you to that point, essentially. And seeing how it responds and changes to the things that it does like. Like today, for instance, we're interested in 261s, so much so that 261s have led to other 261s. And it's been on the failure of 188 200s that have made that happen. Because without the failure of the 188 200s, we would have never been able to get to a 261. And it's interesting now, we can see the closest fib that we got to in this sequence was a 188 200. Only can think,
Top of the hour too.
yeah, that's an increase in volatility as well there. I think it all gets bought back up though. Contrary to popular belief, it's really tough. Anybody that tried to chase beyond the flat top B points there, I noticed that we did have this like secondary, like this W was formed in a way that had a flat top. I just want to take note of that. How's momentum looking? So clearly, all of the momentum is doing something completely different than the price. The price, we can see, is going up. The momentum, we can clearly see, is going down in every regard. Doesn't mean this hasn't been the case at some other point of the day and we haven't pushed through that to end up where we are now. It is true that we have. The red-yellow line is now closer than ever before. I don't like the way we're getting to it though. I'll tell you that right now. These lows in here, there's two B points in there. One of them's already been smoked out, but this one here, that's the low of that node right there. We've got two levels that are like very similar here and here. Gives me deja vu to the morning. You know what we did in the morning? Is we put a consolidation right in between both of them. And I wouldn't be surprised if it did that, Tried to put a consolidation right in between those two nodes and fill it right in. Fill it in and make it so there's no gap there. If it does that again, it would be remarkable. No way it's the work of the public, but the agenda of the market makers that make this the case. Watch for consolidation in that middle area. Here's the B point, almost. Now it's intriguing to me that it manages not to get the B point down below, the big one, the juicy one, the one that people want, but instead it goes for this one. And who's that good for? Well, the people that have been holding long. Obviously buying above this B point is not a good idea, but if you did, make sure it's safe. Under no circumstances, buying above a B point is safe because if you buy, okay, let's say there's a bearish pattern and its target is here, right? And if you buy because you see opportunity in further formation of that bearish pattern, you know, your position will be overlapped when the target gets hit in the future. And I'm like, that's okay. As long as you know that. So it means you have to take profit. So if you're in with the ability to take profit, you know, it should be seriously considered in the event that you're above a bearish target. Not much of a consolidation in the middle, but that can be saved for later. What we did in here, I think we might want to do here again. Perhaps like a head and shoulders into an inverse head and shoulders, like a really crappy version, some sort of attempt at a head and shoulders, inverse head and shoulders in there. Not a fan of it whatsoever. But the usage of the blue line, blue bar, is apparent. Effectively, nothing has obstructed us more from this move than the blue bar. We've managed to test it once, twice, spike through it 3 times, and here we are, making that right shoulder to the inverse. Because the way I see it is I'm like, okay, we have a left shoulder low, head, and inverse right shoulder. And you could say we have a left shoulder, a head, and a right shoulder. Like, yeah, sure, there's a double left on the left-hand side. Who's to say we don't make it on the right? Can we make a second high? Of course we can. And then we'll have 2 on the left and 2 on the right. And I'm like, if it wants to do that, it's one big triangle. Effectively, the last thing to play out was the inverse head and shoulders. It's what we're at right now. The left, the head, the right, the left, the head, the right. Best thing about this is when it ends for sure. Ironically. Unless people like the movement that happens in there, but I'd much more rather it do that. And this, you know, the advancements that it's been making. And I think we're in the business of it. Just a matter of time. The inverse head and shoulders playing out quite well. Not that people should be exposed from here. It's killing me, but at the end of the day, it is working out. And are we not putting a consolidation in between those 2 nodes the best that we can, obstructed by the public perhaps a little bit, but you know, without most of them in the way, we can see that the agenda of the institutions is clear. And it's to put volume in there.
Just triangulating here, just a little triangle.
Yep, but the exact purpose of that triangle is to fill in volume in between these 2 nodes, just like we saw in the morning. It's a little bit more than a triangle. Like I see it as, you know how we started in the morning? We made a node here and a node here. By the end of it, it all looked like one big blob because there wasn't 2 nodes anymore. Because we spent a consolidation in the middle. And now we're doing that again like it's the smaller version of the larger one. Like this node is starting to disappear because it's becoming one thing. There's not any signal that there was a node on the bottom anymore because we've been filling in the volume in the middle. Like I think that this process is a lot more than just a mere triangle. 100%. This is very accurate. It's something where we get a consolidation on the top, a consolidation on the bottom. It grows 2 nodes, one at the bottom, one at the top. We're left with a gap in the middle. It puts another consolidation in the middle to fill that gap. We're left with one large node, exactly like we did here. And this happened lunchtime today. If I go back, we won't even be able to find 2 nodes because it's just made one big one. So it's interesting. It's only those that understand it as it formed will be able to benefit from the result. And I think that it's absolutely remarkable. This is all the work of the institutions right here. Testing this high, testing the blue bar, it's going to be part of the future. The blue bar is more important than the B point, and it wants to show us that. Another way of acknowledging that the previous analysis is more important. And it's like, why on earth would it decide to just come down to the blue and hold it like that? Like, that's good enough for me right there. It's like, hey, communicating exactly what I want. Exactly. Now, why does it care so much? Now I don't care what it does. It could get the B point. But hey, you know, this is the respect I wanted to see it give. Whereas everybody else is looking for the B point. Not me, though. I'm looking for that kind of precision, that kind of accuracy, that kind of perfect movement because the market is supposed to move that way. You know, it's very interesting. This is the domain of the institutions, and it should not be challenged as an average area where typical things happen. It's not like that, 100%. This is an area where extraordinary things happen in the name of the people with all of the money. That is the case. And if it wasn't that way, then why didn't it get the B point? And why did it show so much respect? I'm like, it's a very hard argument. And it's like, why would I demand such a particular thing off of something that wouldn't make anybody any money? But it's just showing like my relationship with the market is clearly something it respected that move over anything else. So I see that as something that is very, very, very clear. B points now hit. Now we test the blue line from a below. We want to test that blue line from below. Basically, it becomes a target again from underneath, like we're testing it now from below, exactly as it should. Exactly as it should. Boom. Now again from above, just finessing it. And we're getting ready to leave it. For one of the larger moves away from it until we come back to it again, which we will. Very interesting. I love moments like this. I know that they have pushed everybody out of the way to the point where they have absolute control of the market. And most people would think this is unbelievable, but every single fluctuation that the market makes, it is part of a process that makes sense, and it's not going to be this way tomorrow. It is the way that it is right now, and it's a matter of understanding the way it's communicated at any given time, just like we understand the English language. You know, I can say a series of different words that will lead to you being able to comprehend my meaning by the end of all of those smaller words. Now, every single one of these smaller moves will lead to me understanding the and comprehending the bigger picture understanding and exactly how to position yourself accordingly in the short term for the best long-term results. And I mean, like, let's see what it does on the daily. If you understand it moving like this absolutely clearly, who's to say that it's not going to do that again on the daily, that it's not going to move just like this for you, you know? And is it something that you could say is my strategy? Well, how is capturing every single fluctuation and every single movement, you know, my strategy? I mean, like, yeah, that's my strategy. You know, not repeating something that worked in the past because I think it's going to work again. But I've never seen it do all of those moves in sequence before, but I predicted all of them. And take it for me, like I literally I'm saying there's not one strategy like everyone thinks. It offends me when I hear that, to be honest. Like, oh, what's your strategy? I want to sit down and learn your strategy. I'm like, yeah, learn that then. I'm like, no, it's not the matter. It's a matter of understanding how to, you know, like how to navigate a machine that's going to give you different results every time. Like when somebody learns how to become a pilot, do they learn how to fly to one place in the same plane in the same way every single time with the same problems? No, they learn how to fly the plane and they learn how to work every single variable and every single like thing that's thrown at them. You know, you can expect them to be able to maneuver differently every time they make the same journey, you know, and I just it's like I worked hard to make it this case, and I can see on Wall Street they also worked very hard to make it that case as well. And I respect it because I look at this as being able to understand their work very clearly. Very interesting to me though. I'm passionate about it, 100%.
And that was one thing that I found was really hard to find when I was first starting, was anybody that could give me any kind of answers or that was passionate about their work. You know, it was always everything was like maybes, or nothing was certainties. That it was almost like they told you you would be crazy to have any kind of certainty. You always had to commit to the fact that there would be some sort of gambling and stuff. I'm like, you call that gambling? 11 moves in a row, absolutely perfect with absolute precision. I mean, like, when they take full control, they do it in a certain way, and I understand how they do it because I could do it for them. Like, that's the interesting part about it, and I will one day. I'm confident, but not for them, but for myself. It's the way I want to have it, and it's hard to do that, but I'm willing to take all of the time and be disciplined. Beautiful movement, but the red yellow line did break. That's incredible, that movement right there. Coming back to the test of the blue line is what we're at right now. Putting this movement on the top of the blue bar could be on the agenda. Contrary to popular belief, we've just tested the red-yellow line from the underside. Everything has been tested from the underside. All the B points have been hit. Now it's like this W has managed to form an M that has now returned back to the B point. Keep in mind, those that are exposed through the close do have exposure to tomorrow's event. Of course, with the event being tomorrow, many people will have to position themselves accordingly from today. Not us in particular, but many of the public. They only can trade during market hours, so they have to make their decision now whether or not they want to be long or short for tomorrow's important event. And we can see that towards the end of the day today, it could be an increase in volatility as people prepare for the report in the morning. Now the same kind of spike on the other side of the blue bar, something of an interest to me, which means that red one up there. And I'm like, alright, new red yellow line, crossing the high. And like I said, we're in the business of doing extraordinary movements today that are contrary to the way things have been moving. This is the domain of those that have the ability to move the market. They feel as though they've pushed everyone out of the way sufficient enough so that they can move the market in absolute favor of their positions at all given times. And it involves making sure that enough people are out of their way. Like I said at the beginning of the day, if we could come down and, snipe people out and then make sure that they don't have a position for when we see clear skies above again, means they won't have anything to sell when we get through the high. Means that if there is an obstruction, then they won't have the opportunity to sell at it. And that means that that's one less person providing resistance at that level. And I think it's imperative to understand that there are entities that are effectively pushing that strategy against the individuals of the marketplace. Now, it is true that we do have 1, 2, 3, 4, and 5. Like, there is 5 waves here. As funny as it looks, it is true. And with every 5-wave move, one of the most important things when we get to the 5th wave is that you can connect the 2nd and the 4th. Think about it. This is a 5-wave move, but so but so is this, right? And it's true that on both of them, or even this right here, when you go like, 3 drives down. Is it not true that that's also 5 waves? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And it's like, okay, there.
That's a little funky looking.
by the way.
Yep, but it is 5 as much as it looks funny. All
And this move only went down to the 188 200.
Oh, that's
So this
interesting.
point, it had hit the bottom of my red volume node. Just
It's
zoomed in there.
it's funny that it's not getting the 261s anymore. It's like where's the juice, you know?
Well, I don't think we're over and done with this. I think it's still going to go down, but we'll see what happens down to 261 down here.
Mhm. Well, the elephant in the room, in my opinion, if we look at these up here, every single yellow line, doesn't matter how crazy the 5-wave move looks, every single one of them that makes a 5th wave makes this trend. And it's at that moment, because that trend is identified, the 5th wave feels compelled essentially to break that level in order to change things. And nothing will ever change unless it does break. So I'm like, all right, well, that line is right here. I'm like, it's got this much space. It better use it well because it has to exert energy at literally 57-degree angle constantly, minute by minute, in order to maintain that trend. If it doesn't, it's breaking. And I'm like, it's got 1 minute. 57-degree push, that's it. Nothing but that, or we break that line. And if it goes 1 minute of sideways, it's screwed. It breaks the line. God forbid it makes an ignition candle in the wrong direction, right? I'm like, it's true. So it's true that yeah, we might try to make a little bit of a push with it, but I'm like, all right, how much time is it gonna buy it? Another minute? So it's like, what is it? Prevent it from being a 5th wave somehow if it comes down? Not really. It is still the 5th wave, and I'm like, well, the 5th wave, as much time as it can buy it, that yellow line, it looks like it's going to break.
It's just on the 3rd wave right now.
Well, it's true, but another thing that makes me think about it is I'm like, if we haven't broken that line for the close, we will be here. Like it's a fact. If we hold that line for the close, it'll be there. It'll have to stay beneath that line until here, or we break it. So we've got a few things we can look at. Like for instance, the green zone and red zone, and how much we made it out of the top of the red zone. Could it be something that we're interested in making out of the bottom of the green zone? And it could be a 261. Not to that one. 161 to that one. We do have a ability to draw a bigger fib set on there as well. This is a level that had a spike earlier. I distinctly remember that. Okay. So anything that it does give with this line, since I've placed it in, when it does break, it's likely to take it back. So that's an interesting statement. We still have time with it. It bought some time. It did. Now, of course, you have to consider when it moves back against it, it loses time as well. Now, what it did right now is very much like a retracement back to that low. It's like a test of the B point.
Well, kind of crushed through the 261, but spiked through it. From that B point, that M up there.
Yeah, I looked at that and it was a little far out. I was like, it was interesting.
Well, the spike actually went past the 300.
I know, that's what I saw. I was like, well, it's like multiple fibs past it. And I'm like, can't be the 261.
Well, it's probably gonna have a double bottom here too. So.
Yeah, it could show a respect for the 261. Come and hit it now, and then, yeah, like that. Oh, I like that it's paused at it like that. Doesn't actually have to stay at it, but be bought back up to it now. So we can see it be bought back up to that 261. It's another form of respect for it, but so far it's been neglecting the crap out of it. That's the double bottom though you're talking about. Well, trying to be.
Very close to that B point, at 13:05 this morning.
It's been, yeah, it's strange that it doesn't get it. Like I'm like, for the amount that it, yeah, but for the amount that it didn't get that one down there, it's true. It didn't get this one either. Like if I make this into a solid line, like you can see, there's like it missed that. It didn't get that. Like it's a thing. It definitely like has been known to miss them lately. And I mean, like, just because it misses it the first time doesn't mean it'll miss it the second. Now we're gonna go for the second time on that one above potentially. So of course it is very centralized. This now becomes red yellow line. That B point's off, and I'm like, all right, that B point being off, it's cool and everything, but this one right here, it's technically never been played out. Like, oh, actually, hold on. It did. It played out from the 127. Okay, the 127. The 127 is now an untested B point itself. Yeah, increase of volatility was pretty hardcore today. We can see we came back down to a white dash line. That's the old all-time high. Basically, that was a level that took a long time to get through. Slow time. We've run into the volume at that level that's presented here. The small short-term 127 B point is actually a third consecutive low. This level right here, I'm going to make it into a B point as well because it's technically untested. This one now is tested and we can remove it. There are two that remain above, and I kind of want to remove these, because this B point, it technically was tested, but where it was tested from is now a B point. And I'm like, well, deja vu to this thing right here. That's exactly the move that we just did. We made this the play out. So this was the M, and it played out. Now this is a B point. And I guess it tried to play out, but it missed it.
200. Yep, to the B point.
To that B point.
Yep.
Yeah. Well, it's interesting because it got through it to test the old all-time high, but yep, it worked out. No other fib I could say would really be, I guess the 227 was close to it, but on the bigger picture fibs here, it really didn't reverse out anything that was kind of relevant. You could say like the 161 was kind of in that area, but 141, go ahead and take those off. These B points are all hit. Every single target is now hit. There's not a single untested target on that chart. And the red yellow line is now broken, and everything that we did on the top of the red zone has been replicated on the bottom of the green zone. And what's interesting is it's not from the outside out, it's from the inside out. Because human beings would always draw it from the outside to the outside. They always like to be wrong. And it's always like that. I've noticed that it's inhumane to assume that it would be inside outside, but it actually is. More common.
Also at my purple line on my VWAP, with the VWAP being lower. The top part of my VWAP.
Yeah, I have VWAP bands where it reversed here as well. But it's not the, or is it the, yeah, it
Oh,
is.
you had it.
Yeah, yeah, it's the same one.
It.
It's the same one.
It's not showing a spike, but on yours.
No.
Yeah, same deal. Same deal.
Yep. Right now we're in the retest for the red yellow line. I like the idea of a 61% retracement in the red zone. I'm like, where's the 61? The red zone. Hmm. One thing that I find intriguing about this environment is that we started by going sideways, and it distinctly went up out of it, and then the largest downwards move. It took the most time to get to that point. And it's true that everything has a downtrend, and the downtrend is the last thing that will break in this sequence. And when the downtrend is broken, we will be left with an uptrend. And that's all I have to say. And this downtrend is being broken. I do like the red zone though, for the 61 being there as well. Of course, that can take some time. I do question how much time it took to be on top of the red zone. Could we spend that much time on the bottom of the green zone like we did last time? When we were in the last range, like I recognized that the way that we responded to the last range was to spend this much time above and then this much time below. And then when we came back at it again, it it did something similar. It did this much time on the red and this much and this much time on the green. And look at how it was on the wrong side. Like the red zone, it was on top of the red zone on the bottom of the green. And it did that again here. So far, ranges that have been acknowledged in the past have been treated like this. And it's been very fair on both sides in terms of movement and time and the distance. And I'm like, well, I can't help but notice that the green zone is being used as resistance more than it's being used as support. And it's very similar to the amount of space that we put on top of the red zone. And it's also very similar to the original amount of movement that we were comfortable making here, not to mention that it's the size of the the red zone and green zone. I mean, that's suspiciously particular, you know? So like again, last trend to break is going to be the red yellow one. And I love what we've done with the support too. We've like totally readjusted it. I love the idea of getting back to the purple and yellow line too. That's kind of tough to do because things have been pretty even around it. Like
It went
this
down to 61, short term.
did it.
Yeah.
Interesting.
Yeah.
Yeah, the 61. You know, the spike in spring lately. The spring has been known for that 61. But I think we've seen this triangle before. Like we're in a little bit of a triangle. And that's not even the imbalance. It's over here. Oh geez. It's a lot closer. But yeah, now it's a matter of what are the odds that we're going to use this range for the imbalance, and the imbalance is the last major event of the day before we know people will have to be positioned for the event in the morning. And I'm like, okay, let's check out this triangle. What do we do with it? Let's take the extremes, converge it into a tip, and that's the triangle. The triangle has to end before the imbalance. As we can see, there's barely any time left in it. We have to prepare for it to leave the triangle and to test it from the outside. So any movement that essentially happens out of the triangle initially is potentially destined to just get immediately erased back to the triangle. And is it a big deal? Not really, but if you didn't know it was going to happen, maybe it could be a big deal. But here is everything being erased back to the triangle. And it's like, does that count? Or do we do it again? I think there's a good chance it doesn't count. But like, is it not true that when we use the green zone and red zone, everything gets erased back to the green zone from the red zone anyways? God forbid it uses the range. It's a little bit more of a predominant one than the other ones we've been used to. So there's a good chance that we do. Now, I'll tell you one thing though, it's different. Like, do you know that we did consolidations like this today, right? Where we would have one and then the other. It would make a node here and it would make a node there. There would be a gap here. We would take a consolidation and put it inside, and that would fill the gap. And, that's one way to make a triangle. Oh yeah, that's really interesting that it's subject to having wicks and spikes out of the top and bottom of that triangle, and they could be the size of the original consolidations. It's an idea, but I like that kind of stuff, and it really does help when it works effectively in a pattern that you can see is being used for that trend. And until that trend breaks, that may be the pattern. Like one thing I'll show you from before, it was when we were doing this and coming up all the way. Like, do you not think that that was a relevant pattern for that trend? And until that trend broke, that was the way of that trend. And you can't find out unless you look. And sometimes when you look, you might try and find things, and those things might not be there, and you might have to look for more things. And that's just the reality of it. So sometimes when I put shapes over top and they don't match, it's not because it's because I want to see exactly if they do. You know, it's the only way to find out. Because finding that equality develops an understanding of exactly the facts of the situation, and those facts can develop, you know, you can start to see things form because you've understood the way that they did in the past, and you can see that they're halfway through a certain process, and you're like, oh right, well I can see the when this process is going to end and when something new can begin, and can I be part of that new beginning? Becomes the question. Now this triangle's coming to an end. Of course, we spiked out of the top first a little bit, and the bottom got more of a spike. Now it's true that this line right here, like, I could just totally readjust it, because it's not doing us any good being unbroken. Yes, it can be retested and everything like that, but it doesn't provide much value. A trend that can be retested, unless you're going for the retest, is of no use to us, right? Only the trend that can break to make a new trend to end this one is of interest, which is interesting to me because I like to see that end start a new beginning, and volatility like the end of this triangle can certainly begin that new trend. It's another spike out of the bottom. So a spike out of the bottom of the triangle and the green zone. And with it being so spiky, I mean, how much time does it really have with the new yellow line? Of course, the yellow line will have to break to get to the red yellow. The red yellow seems really far away, but I think that that high becomes a B point eventually. And the farther we go down, the more it'll go beyond that point. I think it's like the slingshot pullback before actually running through levels that could be of obstruction. Like, I got a lot of gold up here. Like, oh geez, yeah, these two ranges as well. That's a level that we might want to go and dance in, because it loved it when it did before. It's very similar to some of the short-term ranges that we had actually in the short term recently, where obviously there was a green zone here and a red zone here, and it could trade between the two of these as well as get stuck in between these smaller ranges, Which, you know, I like that, because when we get involved with those areas in the future, we'll see it use those zones very accurately, I suspect. And they could be used like these ones. Like, for instance, you know how the green zone's supposed to lead to the red zone? And what has it done today first? If it's ever responded to a new area, or sorry, to an area that we haven't hit before, but it used to be an area, it's always given us a spike on the top of the red zone and the bottom of the green. Filling in the middle area has usually been something that's happened after. It's weird that it happened first, but now we know that because we analyzed it. You know, if we didn't look, we wouldn't know. I mean, like, I just keep going and finding things and developing an understanding of the situation. Right now, the understanding of what's going on here is everything returns back to the tip of the triangle, and that's still happening. We're going to see some changes to that, though, in the future, I suspect. $10 until the imbalance. Any trades made from here on out are directly exposed to the imbalance, and everyone should be aware of that. I want to talk about how crappy that yellow trend line broke. It's terrible trend break, absolutely terrible. And it's like, well, let's take note of every single variable that was going on in that situation. Well, we just most recently tested the tip of a triangle. It was relatively uneven, leading to a third spike down, which could be construed as something that could lead back to that level. We shall see. A third consecutive low can bring interest on the first of the three. The first low out of the three lows. 1, 2, 3. That's not even lows, hold on. But this low becomes an interesting one. This yet again is the old all-time high. It becomes the case that there is no way to get back to that point until we break the yellow line. So it could be on the break of the yellow line that node becomes interesting, because I'm like, well, what else is that? That is this node. And it's like, well, next time we get back to that node, I think it finds easier to make it through it. Instead of just getting to it, we want to get through it. And the yellow line doesn't get readjusted either. I think that was an absolutely terrible fake break. That trend still exists and it's going down in it. But obviously any time spent sideways, if we were to go sideways, the imbalance, I mean, would cause the break, I think. We are testing those VWAP bands. There are some other B points in there, but I don't think they're as valuable as this one. I'm like, do they end at the node? No. Or is everything past that green dash line ever been wicks and spikes that just ended up back at that node? Yeah. Yeah, that's the case. Let me show you a visual example. So like this one, spiked right back, spiked right back, spiked right back, and again, and again. And this one, nah, it didn't really get back. But this is the most progress we've ever done away from that point since we've ever left it. And it's true that we're actually underneath the VWAP bands. And we have to get back on top of them again in order to get back to that green dash line. The imbalance, of course, being under 10 minutes away. Risky time for new entries as they're exposed to the imbalance, of course, but we can see since the triangle it's made 5 waves. another fact. 1, 2, 3, 4, and 5. Does that mean that it will care about this trend break? We shall see. The second and the fourth can be connected.
So we're coming down there, Josh. Look at the MACD at 1534.
Mm-hmm.
You'll see a empty cloud. For short.
Too low for me. I'd never short there. It's in the green zone. Crying out
Yeah. Yeah.
loud.
I'm just saying. I'm just saying. That's all. Just
Mm-hmm.
my observations.
Mm-hmm. Mm-hmm.
Off of 188, 200 at M in the middle here.
Oh yeah. Take a look. The bigger one.
Yep.
Yeah, the VWAP bands are kind of obstructing. It's a pretty interesting spot for an imbalance. This is all movement pre-imbalance because it's right before the major report in the morning, right? So we could see some volatility on these controversial points of the day where I think it's all going to get bobbed back up by the end of it all, but we shall see here. It's a point where basically if anyone targeted the blue and white line and let any continue, this is where you want to make sure you're as profitable as possible. You know, trim down your position, any hedges that have been made. effectively, because the imbalance provides an increase in volatility where things can drastically change, including characteristics. I wonder whether or not that this could be the head to an inverse head and shoulders in the bigger picture, where we make an attempt back at the green zone to make it into a neckline. And now it's like it's got these fibs on here from the bigger move there. Imbalance. The 188, 200 of the imbalance are on the imbalance. And ironically, at the beginning of the day, we talked about how keeping the long trade, and if you do have a hedge trade for the end of the day, there's no better way to be positioned for tomorrow's meeting. And it is the case that the market has moved in a way that has tailored those that acquired the long trade in the morning and then chose to hedge against it with the opportunity to be in from the bottom and in from the top with the equilibrium met in the middle. It's interesting that it is a fact that that's how the market has ended up. Where in the morning, if you
kind of hit the B points too, you know.
mm-hmm,
Which is
mm-hmm.
kind of cool.
We're right in the middle of everything right now, basically.
Yep.
Where I think we'll see the middle of the most recent downwards move again. The last trend to break will be the red yellow. And all of this downwards movement I think will be erased at that point. It's a ploy on the long traders because, you know, think about it from an individual perspective. Like, they're either long and they're having this move come against them, which is difficult, or they're short and they're thinking about taking profit, but they're unlikely to be both. The institutions that have hedge fund, like the hedge funds that have long-term exposure, are likely to have a hedge trade going into tomorrow's report. This is the most favorable way that they could move it to address the fact that, hey, we're gonna have a hedge trade that's already profitable going into the meeting tomorrow. You know, can we manage that? Well, there's enough that can be taken off at levels like this to justify keeping a stop at the extreme high, meaning that unless it makes a new extreme, you'll be safe to continue holding. And as difficult as it is to maintain those positions, it's the best way to have it. The old all-time high is the exact B point, that white dash line. This is the same downtrend that couldn't break initially. Every single point that it couldn't, or that essentially fake braked, I think will be taken back in the bigger picture pretty swiftly. That trend, it's like how likely is it that it breaks before the close? Pretty likely. But it could be in the retest phase for the close, depending on how it moves before then. If it retests and gets it over with, that could be on the table. I think that this old symmetrical triangle line is going to be something that we'll have to deal with as well. Interested in that POC though. Here's that symmetrical triangle line I was just talking about. Looks like we're making it happen. Testing that symmetrical triangle line from above is acceptable. No stop should be dragged below it. Or sorry, no stop.
Hitting those major B points, I've seen it both times, where it comes up off of it as soon as it hits it. So,
Mm-hmm.
and around that area, it's quite effective.
Yep.
I mean, correlation with a fib two is for 180, 200 here, but just good confluence.
Mm-hmm.
But something's going to happen when it hits those things.
Oh yeah. We're back on those VWAP bands, testing them from above. I can't help but notice that we put the same kind of movement on the bottom of them that we did on the top, and it really kind of made that equal. Some people will be looking at this like an inverse right shoulder. Testing the symmetrical triangle line from above. It wasn't much of a problem after all, but it's paying its respects with absolute precision to the original triangle, not a readjusted one. Something tells me that it might even actually want to go for that one. They're thinking about it. It's a matter of whether or not the people will be in the way. They're in the way at that green zone, because that's where they like to trade, inside that node. If we can make the people of that node pay for the red zone, that's what they're trying to think about right now, I think. A little bit of a grind before you make it through the green zone is acceptable. But it is true that this move did make it back to that point, and it is hit. I think we'll see the red zone though.
It's kind of running into that volume node, red and yellow type separation area.
Mm-hmm. Well, I think it's going to make a pretty decent retracement here. I think the entire dump that we've seen here is going to get bought back up. We're going to see all-time high again. All of these moves are just fat hedges for the big players.
Yeah, you see that big histogram on the cloud on the MACD pushing up, and plus the distance between the green line and say the orange line is pretty big too. That's a good sign. It's a bullish sign.
Mm-hmm.
1 minute's running at 15, so we got a bit of resistance here.
Yeah, where the right shoulder could be.
Yeah, for an inverse, yeah.
Yep. Actually, I'll leave that symmetrical triangle line on. Just in case. I did say it would get to it. It's out there. It's extreme. I said this is an area for extreme expectations. Because they have absolute control. All the people, they've all quit. So they don't get to see this kind of movement. Because like I said, when it was going slow, consolidation invites capitulation. Look what happens on the other side of having patience, right? It's huge. You can tell they're serious players too. And they're not obstructed by the people that don't know what they're doing in the morning. And the people that don't know what they're doing trade like crazy in these areas and they get treated like crap and they're all worn out. Look at them all trade in there. This is like a huge like footprint of all the people that traded in there. And look at how red it was. And look at how wrong it was to be red in there. Like they all were treated like absolute terrible. And it really did run against all of that red that was formed in there. And I'm just, whatever we see down here, I wouldn't be surprised to see it on top. Because whatever we saw on top, we saw below, and we want to continue that pattern of returning back to the middle and making everything even. It wouldn't surprise me. But that's that for today. Effectively, we've run it, and I do believe we're going to continue this trend, and everything happened really well today. So, I'm looking forward to tomorrow, and hopefully you guys have a wonderful evening, and I'll catch you guys later.
John, appreciate it.
Yeah, anytime.
Take care, guys.
Yeah, take care. Have a good one.
Bye, guys. Bye.
Yeah, see you guys. See ya.